And good afternoon, and I welcome you once again for the MTB, that is Mega Training Program. And think I'll go fast here because we have to complete the syllabus at the earliest. So I may extend the time by another 15-20 minutes after 6:30. Please bear with me. And wherever possible, I'll just skip. But wherever it is required, I'll go in full swing. Don't hesitate. If you have any doubt, you are free to ask any doubt here. And now I'm going to start with the packing credit loan. What is a packing credit loan? Packing credit loan is a loan which the bankers, they have given based on the export order. Based on the export orders, they are giving the packing credit loan. So here, that means the borrower has to produce the confirmed export order that is supported by LC issued by the foreign banks. They have to give this to the bankers. And bankers, on scrutiny of the export order, they sanction the working capital loan in the form of packing credit loan. That means the packing credit loan has to be utilized only for the purpose of producing the export goods, and it should not be diverted towards manufacturing of domestic goods. So this is the main thing that you have to know about the packing credit loan. And next thing is cash. It's a cash credit loan for the forex transactions during the export. So whenever you are doing the export, the bankers, in order to meet the export order, they provide a loan in the form of packing credit loan. And whenever they have exported the goods, then there are then the borrower has to submit the bill either for collection or for the discount. If they discount, for collection, let the bill goes for collection. Then after collection, the same is being given credit to the packing credit loan. Packing credit loan should be adjusted only in forex. It should not be adjusted in the Indian rupee. Okay, this is one. And when they discount the bill or when they purchase a bill, the amount has to be given credit to the packing credit loan. Then the bill is sent for collection. Then money will come to the bank. Then they adjust the forex. There is a difference in foreign currency. The bankers, they pass on only if the bill is being discounted. And if it is a purchase, then the profit or loss goes to the bank. So cash credit loan is a form of which has been utilized for the purpose of export is called as packing credit loan. And for that, there should be a proper sanction. And this has to be supported by LC issued by approved bank against confirmed order. So that means there should be a confirmed order and it should be issued by the approved bank. Approved bank, it should be in the list of the RBI. Only against that LC approved, which has been issued by the approved bank, the packing credit loans have been considered by the bankers. And all the documentation, authorization, disbursement, outstanding of each loan is as per the sanction letter. So normally when they say that it's a packing credit loan, it may be even for each and every confirmed order, you can have packing credit loan. And sometimes they are having some running PCL also. So that means they are giving, overall they used to give some 20 lakhs or 2 crores or 3 crores. So this is a running PC. So various confirmed order, out of that you can utilize the packing credit loan on a running basis. That is called as revolving PCL or running PCL. For each and everything, the party, they have to execute the documents as per the loan sanction letter. And other point in a packing credit loan is a keep separate record for each confirmed order, because one packing credit, one export order has to be met by 30 days. One export order has to be met by 60 days. That means if any export order is being met by 30 days, then PCL has to be utilized only for the 30 days. And it should not be extended further period. If the PCL is for, the confirmed order is for 60 days, then the PCL limit has to be utilized only for the 60 days. That's why you have to keep a separate record for each confirmed order. And most of the banks, even for the expired confirmed order also, the packing credit loan is being utilized by the party. This is also another deviation from the RBI norm. So that's why you have to maintain a separate That's why they have to maintain a separate PCL. Export separate record for each confirmed order. Keep a separate record for PCL for each order. Same thing. And running PCL is also allowed. That's just like a CC. They sanction overall limit of 2 crores or 3 crores. So this PCL has to be utilized only against the confirmed order. So the banker bankers, they have to have a close lookup. That's why I said if the limit is for, say, for 30 days confirmed order. So if the confirmed order is to the tune of 20 lakhs, then the PCL limit should be utilized only to the extent of 20 lakhs and not beyond that. So this should be closely followed by the bankers. In running PCL, it is very difficult, but anyhow, as an auditor, we have to see that running PCL has to be utilized only to the extent of the export order that has been utilized by the party to manufacture the export goods. Total PCL should not exceed the value of the confirmed order. So this is the point which I want to say, or unexpired outstanding LC favoring the export. So that means the total PCL is 3 lakhs and the confirmed order is only 2 crores. No, sorry, 2 lakhs. Let us take the total PCL is 3 lakhs and the confirmed order is only 2 lakhs. That means you have to reduce the PCL limit from 3 lakhs to 2 lakhs because the outstanding, that is the export order is the limit up to which the PCL has to be utilized. So PCL limit, packing credit loan should not exceed the value of the confirmed order. Next point is PCL limit has to be adjusted by negotiation or purchase of the export bill. So whenever goods have been manufactured out of the packing credit loan, then the borrowers, they have to send the goods for abroad. Then they, on the basis of bill of lading and receipts, they can go and submit the same to the bankers. They can have negotiation that I want to discount the bill. Then the bankers, if they got the limit, they can discount the bill and they are given the process directly to the packing credit loan. So the borrower can reutilize it. So that means the borrower should have got 2 limits. One is for packing credit loan and another one is for bill discounting or bill purchase. So the difference between negotiation and purchase. Negotiation means the ownership lies with the borrower. So whenever they negotiate and whatever money comes, suppose if the money comes as, suppose for example, if 70 lakhs bill has been discounted and sent for collection, due to fluctuation in currency, if 70 lakh 25,000 comes, then the entire 25,000 profit should go only to the party or borrower. If it is purchased, that means it becomes bank's property. So whatever be the profit, that profit goes to the bank. So PCL can be adjusted by way of negotiation or purchase. Then interest has to be applied as and when PCL are liquidated, and for each quarter, that is, interest is compounded and not on simple interest. So whenever they utilize the PCL, interest has to be charged on the quarterly basis. Now it is monthly basis. They are doing it. So whenever PCL is liquidated, means that is whenever they close a loan, up to the date you have to charge the interest, and the interest should be on the compound base and not on the simple interest base. Stock statement submission, yes, that means as per the sanction letter, even for the packing credit loan also, stock statement has to be submitted by the party. For this, you have to please refer the sanction letter. And if it is not submitted as per the terms of the sanction, then penal interest has to be charged by the bankers. And follow up the overdue loans, slow moving accounts. So normally the bankers, if the packing credit is there and if the party has not produced the goods, so that is all coming under the concept called overdue loans. That is, if the export order has to be met, so within 30 days, and the party, if they are not able to meet the terms, and that packing credit loan will become overdue. So the bankers, they will have a very close follow-up action. And PCL is, if the PCL, packing credit loan, should be closed only out of the forex. It should not be closed out of the local funds. So how is it possible? That means PCL is being sanctioned by the branch to the customer, and the customer has not exported the goods. So automatically, when you sanction the PCL, packing credit loan, they will be getting some concession from the bank for the exports. And if there is no possibility of the export of goods, then PCL account has to be closed. And if it is closed out of the Indian rupee, then the commercial interest rate has to be applied on those PCL, and the borrower is not eligible to get the concession interest. And PCL should not be outstanding for more than a period prescribed by the bank. Say, let us take the PCL outstanding should not exceed the confirmed order period. It's a simple logic. The confirmed order is 60 days. So within 60 days, the borrower has to manufacture the goods, and they have to send the goods to the buyer of that goods. And if they are not sent, then the cutoff date for the PCL is the cutoff date of the export order. It's very, very simple. And next point in PCL is RBI and ECGC sanction is obtained for extension period and a prescribed interest rate charge. In case if they want to extend the confirmed period, and if the buyer say that, okay, we will extend another 3 months, and this extension has to be informed to RBI and ECGC, that is Export Credit Guarantee Corporation, and they have to get the permission from them, and accordingly, for the excess period also, the interest rate will be charged by the bankers. And the stocks have to be inspected by the manager, have to be inspected by the stock auditor, or have to be inspected by the RBI auditor according to the needs. So stocks are eligible to be inspected. Next one is stocks under PC, import CC and domestic CC are to be segregated separately and kept in a separate storage. That means the borrower would have obtained the loan for credit loan, and sometimes for the import credit also, import cash credit also he has obtained, and sometimes for the domestic also. Few parties, they are doing all the things. So if that is the case, they have to segregate all the stock. This stock is for PC, this stock is for domestic business, and this stock is for import goods. So all these stocks should be segregated so that whenever and whoever goes for inspection, they can easily identify the quantity of the stock and quality of the stock. And packing credit loan should be given only in foreign currency. Interest rate has to be charged in currency. That is, packing credit loan is being sanctioned to the party in Indian rupee, but when they export the goods, it has to be exported in foreign currency. Whenever foreign currency comes to the bank, and it has to be given credit in packing credit loan, the credit should be given only in foreign currency. That means the foreign currency, whenever it comes to the bank, they close they discount the foreign currency, and they given the credit to the packing credit. The simple logic is packing credit loan should be closed only out of foreign currency. It should not be closed out of Indian rupee. If it is closed out of Indian rupee, then the interest rate has to be charged on the commercial rate. And overdue interest has to be charged correctly. This is also another income leakage area that you have to do it. And insurance for the packing credit loan stocks also should be done by the bank. So terms of insurance you have to see. Next item is packing credit loan and post shipment. The ECGC premium has to be paid monthly. Suppose if the packing credit loan is there and the shipment is also made, then Export Credit Guarantee Corporation premium has to be paid. Suppose if anything goes wrong, then ECGC takes care of the payment. So this is an important point. You have to see that whether ECGC premium is being paid. Now they say that it's monthly, and most of the bankers, they say that you have to pay the ECGC premium on annual mode also. So they say that ECGC premium, we are going to cover some 2 crores. So for the entire 2 crores, they receive the insurance in advance. So this is another important thing that you have to see whether the PCL is being covered by the insurance or not, that you have to see. And total outstanding packing credit loan should be balanced with GL. So this is the total outstanding of PCL, and what is stated in the GL, that you have to compare it. So normal for PCL, you have got a separate ledger, and GL, you have got overall list. This entire individual PCLs have to be added and compared with the GL, and it should be tallied. And overdue transactions are followed up with the borrowers. In case if the packing credit loan is there and if the transactions are not materialized or if the goods have not been produced, then the bankers, they will have a very close-up follow-up with the borrowers. And verify caution list issued by ECGC Finance, get prior permission from the ECGC. Because ECGC, they are ready to give the claim only when the borrower or the supplier, they are not in the hit list or they are not in the caution list. And sorry, I thought, so is there any time limit to receive export process in, yeah, see, that depends on the bill, Danny, that depends on the bill. If the bill says that within 30 days you have to make the payment, that is why the confirm order, it is there. In the confirm order, other banks say that on the receipt of the goods, we will make the payment within 3 days or 4 days. For that, you have to please refer the terms of the agreement. So it should be there in the confirmed order. There you can do it. And point number 5, so verify the caution list. And if it's already without verifying the caution list, if anyone has exported, then they have to get the permission from ECGC. Prior permission from the ECGC. Otherwise, ECGC Export Credit Guarantee Corporation, they will not make the claim if anything goes. And other important points of PCL is disperse the PCL in bank's format if not inquired. Suppose that means the PCL has to be dispersed as per the norms of the bank, and if without verifying, without creating any record, and if the bank they have sanctioned PCL and if they release the fund, then that point you have to verify. And that means it is a clear indication that disbursement of PCL should be in the bank's format. So you have to ask for the bank's format. What is the bank's format? There, from there you can start the audit. And letters of customers must be duly authorized, duly done by the authorized person. That is, this letters of customers, that is the export order placement and sometimes the buyers they place the order and maybe the staff would have executed the document. So the letter of authorization to the staff has to be obtained by the banker before they release the PCL. So procedures. And verify the specimen signature of the customers. This is also only a procedure. This is what I want to say about the packing credit loan. And it's a very, very simple packing credit loan is a loan to be treated as CC or meeting the export. So for that, the party has to produce the confirmed export order supported by LC. After export of goods, the bill may be sent for collection, may be negotiated, or may be purchased by the bank. If the bill is sent for collection, the process has to be directly given credit to the packing credit loan. If the bills have been negotiated, then after taking the interest, the remaining amount has to be given credit to the customer's account. Thereby, they are closing the packing credit loan. And with reference to the bill purchase, then that means banks, they are purchasing the bill. Then after purchase, the bill is the property of the bank. So whatever be the collection, that goes to the P&L account of the bankers. It is not going to the customer's account because on the purchase, the process have been given credit to the packing credit. So this is the deal. This is what I want to tell about packing credit. And in packing credit loan, you have to maintain a separate ledger folio for each and every packing credit loan, and the outstanding of packing credit loan should not exceed the confirmed order. This is another point that you have to see. And also running PCL is also allowed. This is what you have to concentrate with reference to packing credit loan. But when you go to the spot, when you verify the accounts, you will get a lot of queries. So you just do the audit very carefully. Next thing is I'm going to start with the bank guarantee and LC, because this is also one part of the non-funded advance. What are the important things that you have to concentrate on the bank guarantee and LC? Wherever I'll go fast because I want to cover the entire session. Bank guarantee, LC. So here Bank guarantee. What is a bank guarantee? It's a contract to perform the promise or discharge the liability of a third person in case of his default. It's a contract to perform the promise or discharge. The bank promises that if the party has not fulfilled the thing, then I will make the payment. So it's a contract to perform the promise or discharge the liability of a third person in case of his default. So how many parties are involved in a bank guarantee? There are three parties. One is banker, one is the borrower, third one is beneficiary. So guarantor, that is who gives the guarantee. It's a bank, they are giving the guarantee. And principal debtor, on whose behalf the guarantee is being given, it's a borrower. And the creditor is the beneficiary. Creditor or beneficiary, in whose name the guarantee is given. So there are three parties in a guarantee. And liability is co-essential. That is, guarantor and principal debtor, they have to compensate the beneficiary in case of non-performance. So this is the concept of guarantee. That is, bankers say that if the party is not doing anything on such and such date, we will compensate you. So that is a guarantee given by the banker. So the guarantor and principal debtor, they have got the joint responsibility towards the liability, and they have to honor the beneficiary in case of invocation of the bank. What's the applicability? So it is applicable for the domestic trade and services. It is applicable for import and export of goods and services. And it can be even issued manually. Bank guarantee also can be issued manually, and bank guarantee can also be issued electronically. So I can say that all these details you cannot find anywhere, because this bank guarantee and LC I have compiled from some 7-8 books, and I presented the PPT. So this will be useful to you. And BG register you have to wait. BG register means for each and every branch they have got the bank guarantee register. So please verify BG register. So ask for the BG register. In the BG register, you can see all these columns: serial number, number of BG, issue date, valid date, name of the customer, name of the beneficiary, and purpose of the BG, what is the amount of BG, margin, what is the margin money. So for each and every bank guarantee, margin money has to be provided by the borrower. And what is the security? Is it a deposit receipt or is it collateral security? And what is the invocation date? Invocation date is the date on which the beneficiary has surrendered the BG to get the money. So, and after invocation, the bankers, they have to make the payment. What is the date of payment? And the banker, they have to recover that whether this has been recovered from the customer or not. So simple logic, whenever they issue the bank guarantee, they have to record everything. And when the beneficiary when the beneficiary has given the request that there's a failure in service, then the invocation starts. So what is the invocation date? This you have to see. Next one is the party has to make, that is bankers, they have to make payment to the beneficiary. What is the date of payment? And the amount has to be due from the customer, and whether the same has been recovered from the customer or not, that also you have to mention here. So this is the column that you have to verify from the BG register. And confirmation of BG with beneficiary refer customers upon transaction. Here, the bank guarantee has been issued by the banker. Okay. And the beneficiary has to confirm that we have received the bank guarantee and we accept the terms and conditions that is stated in the BG. So for that, please refer the customer upon the transactions. What are the types of guarantees? This is a very, very important. How many guarantees are there? Financial guarantee, performance guarantee, and deferred payment guarantee. What is deferred payment guarantee? We will discuss. And advance payment of guarantees and foreign bank guarantees. These are the 5 bank guarantees that you have got. So we will explain each one by one. That is, what is a financial guarantee? It has been issued by the banker to meet any financial obligations. Guaranteeing a loan or debt. You can give the money to him. If the party has not paid, we will give the loan. We will give back the money to you. It is guaranteeing a loan or debt. It is coming under the financial guarantee concept. Now it is a performance. From the word itself, you can understand. Suppose it is a performance towards a contract, because sometimes the bank, sometimes the borrower would have entered into contract with some government, and they say that within this date you have to complete the job, and if it is not performed, then the government may say, government has to be reimbursed by saying that for the non-fulfillment of payment, this is the penalty, this is the amount you have to refund to the government. For that, the bankers, they are giving the guarantee. So that is why it is coming under the concept called performance guarantee. So issued in respect of performance of a contract or obligation, and non-performance of a contract or services, as per the guarantee agreement, the beneficiary has to return the money, has to repay the money to the government or beneficiary. And so long as till they return the money, the concept, it is there in the performance, that is, it is there in the non-funded thing. And when they honor the commitment, then that non-funded advance will become funded advance from the date of payment, and within 90 days, the entire dues have to be paid by the borrower. Otherwise, that account will be termed as NPA. And only monetary liability, that is only, the liability is only for money. It is not a, it is only a monetary, it is not a, what's that, quantity wise, it is not there. So we will pay you some 100 bags of rice. That should not be there. So the liability should be only in the money value, and it should not be there in the non-money value. What is deferred payment guarantee? It is being given towards supply of goods on credit, just like it is LC, just like it is equivalent to LC. Sometimes they say that every month we will supply the goods, say 10 lakhs worth, and every month you have to make 2 lakhs. With the borrower, if the supplier has not, if the buyer has not made the payment of 2 lakhs, we will give the money to you. So this is called as deferred payment. That is, the offers to make the payment in installment. So that is very, very easy. 10 lakhs is the total value of the goods purchased, and the contract is every 1 month you have to pay 2 lakhs. The borrower has to make the payment of 2 lakhs, and the supplier say that no, you have to get the bank guarantee. As performance guarantee, you have the performance guarantee you have to get. Otherwise, you can say that deferred payment guarantee. Bankers, they issue the deferred payment guarantee based on the transactions that they already have with the bankers. And 2 lakhs every month, for example, 2 lakhs every month, the borrower has to make payment to the supplier. If it is not being made by the borrower to the supplier, then the banker, they have to make to the supplier, and this 2 lakhs has to be recovered from the borrower. For that, they would have obtained some collateral security, some deposits and each and everything. So this is offered to make the payment in installments. For that, bank guarantee is given. And non-payment of installment, automatically the beneficiary will ask the bankers to make the payment. And bank has to make the payment. So if they ask, if the beneficiary asks for the payment, then the bankers, they have to make the payment to the supplier of the goods. And this you can use it for term loan or purchase of goods. Term loan means any purchase of machinery, that is any capital receipts or capital asset also. This DPG can be utilized. And now advance payment of guarantee. What is advance payment of guarantee? Sir, I want to supply the goods to you, but you have to make the goods. Now it's ulta. It's ulta. So you have to make the payment to me. So I am ready to manufacture the goods as per your order. The total value of the goods is 10 crores. But you have to make an advance of 5 lakhs or 5 crores. So the person who makes the payment to you will demand that you have to give the bank guarantee to me. Then only I will remit 5 crores. So to make the advance payment, the bank guarantee is also required. So that is coming under the category of advance payment of guarantee. That is payment done by the buyer to the seller to meet purchase expenses order obligation. Because only on behalf of you, I am manufacturing it. Okay. For that, you have to make the payment of 5 crores. Yes, I am ready to make the payment of 5 crores. What is the guarantee for me? If you are not supplied and my money has gone. So for that, the person who is making the advance payment require you to produce the guarantee. This is called as advance payment of guarantee. and insists the seller to produce the guarantee. So I am the seller. So I am the seller here. I have to produce a guarantee to the person who made the goods. And if I am not able to supply the goods on time, then the beneficiary can invoke the BG and they can get back the money. And foreign bank guarantee. What is a foreign bank guarantee? It is normally used in international trade and it is issued for the foreign country beneficiaries. Suppose if anyone wants in foreign currency, any foreigner, they want a guarantee from the Indian banker for any international trade. It's a regular bank guarantee. It's just like equivalent to regular guarantee. And if the guarantee is issued, this type of guarantee is being issued in the dollars. So this is called as the foreign bank guarantee. This is the 5 methods of bank guarantees are there. What is the procedures to be followed by the bank? Sir, when will be recording is provided, as I won't be able to attend due to some due days works. Thank you also. And I know what I'm missing. Thank you for the knowledge. Okay, Vijay Pratap sir, I've already started the recording. I've already recorded 3 things and 3 sessions, and remaining session, this also I was already started to record, and I'll see the speed. Maybe tomorrow I try to send the recorded version to you. Not only to you, to all the participants. To all the participants, I will try to send all the recorded versions, and we'll see. And I'll see that tomorrow you will be getting it. Anyhow, all the best. Please do and complete the due date work. What all topics are pending to be covered? Yeah, I will try to complete everything. And what's the procedures to be followed by the bank prior to the issue of BG is they have to examine the terms and conditions of the original contract and whether the party has got the capacity to execute the contract. That is me. I am the local buyer. Whether I have got the borrower has got the capacity to execute the contract. They will see from the physical angle and from the financial angle whether I am capable of making the repayment. If the bank guarantee is being given, I have to make the payment to the bankers. Whether I am capable of meeting the commitment in financial angle also, and what is my present experience and past experience to handle the contract. What is the present assignment that I am having on my hand? Have I got any experience here? That also you have to see. And others are, what is the name of the beneficiary? That is the in whose name the BG has to be issued. What is the total amount of the contract? Where we have to issue, whether we have to issue in Delhi, whether we have to issue in Calcutta, whether we have to issue in UK, and what is the time of completion of the contract? Is it 3 months, 2 months, or 4 months? Because if it is 3 months, 2 months, or 4 months, for that they have to charge the commission on the BG. And what is it? That's a penalty clause will be there. And if you have not completed the contract on time, the penalty clause will also be there in the BG. And what is the terms of advance payment and adjustment? Sometimes some party would have made the payment in advance, and how to adjust everything has to be clearly mentioned in the bank guarantee. And what are the documents to be submitted? This you will get a list from the bankers. For the BG, there are some 7 documents are there at the bank. That also you have to verify. And what are the other aspects you have to see is total value of the guarantee to execute the project and sharing arrangement with other banks. Suppose if the project is for 5 crores, one bank can give the guarantee to the tune of 2 crores. The remaining 3 crores have to be shared with other bankers. So you have to see all the sharing arrangements, sharing agreements, and then only BG has to be issued. And where is the source of the funds by the customer? Yes, the beneficiary has invoked the bank guarantee. The bankers in turn, they have to make the payment. So this has to be collected by the banker from the borrower. So what is the source for the customer? That also to be analyzed by the banker before issuing the bank guarantee. What is the schedules or dates of execution or completion? That also the bankers, they have to verify. What's the subcontract in case the agreement is given to you, and if you have given the subcontract to others, so you have to verify that subcontract details also. And what are the total invoked guarantees and what is at that present stage? That means the guarantee is being invoked, whether the payment has been made by the banker or not. So what is the percentage? How many bank guarantees have been invoked and how many bank guarantees are present or pending? have been invoked, bankers have paid, but the borrower have not paid the amount. So all these details you have to find. And what is the number and amount of outstanding guarantees? That is work in progress. That means the bankers have issued the bank guarantees. What are still pending? That is, the work is going on and the beneficiary has yet to claim the amount by way of invocation, or whether the party has not complete, whether the party is about to complete this contract or not. That means the bankers should have got a very close that is verification of the works that are in progress. This is with reference to the bank guarantee. Now, another thing is pending guarantee claims. What is a pending guarantee claim? Guarantee is being invoked, but the bankers, they have not made the payment. So sometimes the beneficiary has already informed the banker that the party has violated the terms. We are about to invoke the guarantee. What is the general expenses in the form of commission and everything that the bankers they gain from the BG also you have to verify. Now, with reference to advance payment guarantee, goods must be pledged or hypothecated only in favor of the bank. If no, means you have to get the waiver from the head office. Already OCC has OD enjoyed, DP has to be arrived at after deducting the advance payment guarantee, because the OD is given, the money has already come, so you have to remove that portion, and based on that you have to arrive at the DP, drawing power you have to arrive at. And irrevocable power of attorney in favor of the bank has to be given for the direct payment of supply of the goods. Indirect, that is irrevocable power of attorney. In case if the payment is not being made, then irrevocable power of attorney has to be given in favor of the bank. So these are only procedure things, and partial claim of BG is not allowed. Suppose if the bank guarantee is given for 2 crores, we will invoke the we will invoke the bank guarantee only to the tune of 50 lakhs. It is not allowed. So today we will claim 50 lakhs, tomorrow we will claim another 75 lakhs. So this is clear that partial claim of bank guarantee is not allowed. Payment should route through only through the customer account. It should not be paid directly, and whatever be the thing, the bank guarantee amount has to be given credit to the customer account. From the customer account, then the beneficiary has to be paid. And the bank, they are not supposed to make the direct payment from the bank account to the beneficiary account. Guarantee in whose favor they have to give. Normally, the guarantee is being given in favor of government bodies, coffee board, customs authorities, GST, income tax authorities, dispute. That is, if there is any dispute, the tax authorities, even to the court, foreign exchange transactions, release of goods from central excise authorities, and performance guarantees for purchase and import of machineries and supply of raw material. For all these purposes, they are giving the guarantee. So in this favor, the banks, they are giving guarantee. You have the following. What is the procedure to be followed? It has to be issued only to the existing customer. That means a new customer is not eligible to get the bank guarantee. So not to be issued to those customers who have enjoyed credit facilities from other banks. Suppose if somebody is enjoying loan from the IOB, and if they want, suppose if the customer has approached Bank of Baroda, sir, can you issue bank guarantee? No. Since you have enjoyed the credit facility with IOB, we are not issuing the bank guarantee. So, yes, you should not, the concept is you should not have enjoyed any credit facilities from any other bank. Sanctioned with the same due diligence as in the case of fund-based through, though it is a non-fund-based. Same concept. If non-fund-based is being honored, then that becomes fund-based. So, same rules and regulations they have to follow. That means they have to execute all the documents, and if they want to have, they have to create MODT also, they have to go and create the MODT. And they have to verify the borrowers, follow up, and everything they have to do. And ensure that the reimbursement of invoked guarantee amount. That means the guarantee is being invoked. Invoked means the beneficiary say that you have to make the payment to us. That is called as invoking of guarantee. The payment has been made by the banker to the beneficiary. Then automatically the borrower has to reimburse the amount to the banker. So the bankers, they have to ensure that the reimbursement has to be done at the earliest or within 90 days. Otherwise, that that invoking amount will become NPA. In performance guarantee, ensure the experience, capacity, and means to perform the obligation. So it's all procedures. And not to issue bank guarantee in open LC in other banks. So it's a very, very technical thing. Sir, I want to open a LC in other bank. So can you give bank guarantee? And normally it should not be done because LC has to be issued based on the deposit or collateral security. And it should not be issued based on the other bank guarantee. It is the other bank, they are very happy to issue, but this bank guarantee should not be utilized for the purpose to open the LC. This is another thing that you have to see, because whenever you verify the LC, BG register, you have to say this, and not to issue the bank guarantee in favor of NBFC. There's in RBI, there's a restriction. Okay, Bharani, I'll come. Not to issue bank guarantee in favor of NBFC. That is, that's the RBI restriction. Non-banking financial companies, no bank guarantee in favor of them. The bankers, they have to issue. And regarding revoking, it's very, very simple. Bank guarantee is being issued in favor of some X person. So the Y is the borrower. Y has not performed the contract as per the agreement. Then that X will come and surrender the bank guarantee to the banker. Since Y has not performed the activity, you have to reimburse the money. So if the beneficiary has surrendered the bank guarantee to the bankers, and that procedure is called as revoking. That is cancelling the BG and getting the money back. And what are the other important points of BG? And before that, I have received a question from Subbarao. For a BG with a 2-year term, BG commission is collected by the branch. Shall we book BG commission as income for the total or proportionately received in advance? Yeah, so Subbarao sir, you have to do it proportionally. What is the commission applicable for this year only you have to take, and remaining thing you have to take to the liability. That you can see from the sundry liabilities, suspense account, or on the balance sheet liability side you have to book, and next year it has to be reversed because it is a liability, because you are eligible to claim only this year commission. And application you have to submit and fix the credit limits in single or regular. So that means, what is a regular? That means in overall this party is eligible to get 10 lakhs. But each and everything, so now he requires only 50 lakhs. For this 50 lakhs, we will give the guarantee. Tomorrow you will come and ask, sir, can you give 75 lakhs bank guarantee? Again, I will give. So that's a limit fixed, just like cash credit limit, they fix the overall limit. So up to 20 crores, up to 10 crores, we will issue the bank guarantee. In that, they want so many bank guarantees. Sometimes I need the same to be produced to Karnataka government. I need the same to be produced to Reliance. So for each and everything, bankers, they have to make the commitment to issue the BG, but they are fixing the overall limit. In that also, this is also another concept, thereby you can issue the DD. See the delegated powers of the manager. Simple. So a bank guarantee, suppose if the manager has got the power to issue bank guarantee to the tune of 10 crores, then that is 10 lakhs, then only to that extent he can issue the BG. And if the amount exceeded 10 lakhs, then that has to be forwarded to the regional office, and from the regional office you have to get the BG. Read the terms and conditions of BG. So you have to read, as an auditor, you have to read the terms and conditions of BG and see that whether it is against the norms or not. See the collateral security as security. Normally bankers, if they issue the bank guarantee based on deposit, they will be the happiest person. But if they issue the bank guarantee based on the collateral security, as usual, they have to take the legal opinion, they have to take the valuation report, and every year they have to take the encumbrance certificate and everything. So they have to see the, you have to ensure that collateral security as security. So as usual, you have to verify all those collateral security. You have to go to the spot and you have to take the insurance for the collateral security also, and you have to take the encumbrance certificate every year, and you have to get the valuation report, you have to get the legal report and everything, as usual. It is just equivalent to the loan, but it is called as non-funded loans. Money deposits are, if any deposit is being made, then based on that, bank guarantee will also be issued. and margin money towards bank guarantee. See, normally a bank, if the contract is for 10 lakhs, the bankers, they say that we will give you guarantee of 7.5 lakhs. Why? If you invest 2.5 lakhs, you will have some responsibility because my share is 75%, your share is 25%. Then that means there is some binding. Otherwise, there is no binding. So the margin towards BG, what is that? That is clearly stated in the sanction letter. And unsecured and partly secured BG are not allowed with respect to the payment of tax or matters pending before court. Secured. Without security, we will not give any bank guarantee towards payment of tax or before for the matters pending before court. Partly secured, sir, we need 50 crores of BG, but I am able to deposit only 10 crores. So that is also, this matter also you have to bear in mind. And others are unsecured bank guarantee not to be issued beyond 2 years. So this is also another important thing. So unsecured bank guarantee, you can issue only for 2 years and beyond that it is not permitted. But if it is supported by collateral security, even they can issue the bank guarantee for 5 years, 10 years, even for 15 years also. But the bank guarantee is unsecured, that is without receiving any security. If the bank receives a bank guarantee, then that is called as unsecured security. The that is the period should not go beyond 2 years. And secured bank guarantee not to be issued for more than 10 years. But head office has got the power to, that is, it's a clear that unsecured, it is you can issue it for 2 years. And for secured, you can, bankers have got the power to issue up to 10 years. If it goes beyond 10 years, they have to get the head office permission to issue beyond 10 years. And to issue unsecured bank guarantee, regional office permission or divisional office permission is required. So that means bankers have got no permission to issue the unsecured BG. This is very, very simple. And next one is, see the protective clause in BG in favor of the bank and as well as in the customer. In case the beneficiary does some mischief, in case if the beneficiary has defaulted in terms and conditions of BG, then the bankers, they will not make the payment. So that should be a protective clause that is clearly there in the BG. And guarantee for a specific amount for a specific year. We guarantee only to the extra dot. And this guarantee is applicable for a period of 15 years, for the period of some 2 years. So the guarantee is for a specific amount and the guarantee is for a specific period. And BG should not be issued for any difficult terms. Suppose if there is anything that is not possible to be done by the borrower, and for that bank guarantee they will not issue. So tomorrow you are going to be the chief minister. Is it possible? It is not possible. It's a difficult terms and conditions. So against which BG cannot be issued. And BG should have protective clause for both the customers, for the bankers, as well as to the beneficiary. And BG in favor of bank directors or firms, companies in, suppose if the bank guarantee has to be issued on behalf of the board of directors of a bank, yes, the branch manager, regional office, zonal office, no one has got the power, and this type of BG can be issued only by the head office. That means board of directors, they have to decide the issue of the bank guarantee, and the power has not been delegated to the branch manager. So it is very simple. On in whose behalf this BG is issued and for who is the beneficiary, everything as an auditor you have to go through it. And efforts to see the repayments out of the own resources. So this is a very, very important thing because banker, they are ready to issue the bank guarantee because they are getting the commission. And if the party, after making the payment, that is the borrower, has to repay the loan to the banker. And they will see the real source. And if the BG is not paid, the bank is said to be in violation because bankers say that we will make the payment. And if the beneficiary has surrendered the BG for invocation, they invoke, but the bankers, they are not ready to make the commitment. Then the bankers are said to be in violation. So this is another important thing that you have to see. Next one is BG with interest clause. Suppose if they say that with interest, that means bank guarantee, if it is not fulfilled within the step, we will make the payment with interest. So that is the BG class with interest class. Then this has to be issued only with the head office permission. That is, bankers are liable to make the payment of interest. So this has to be issued only with the head office permission. Commission has to be paid in full and not in installments. Suppose if the BG is required for 3 years, then the entire 3 years commission has to be paid in advance by the borrower to the bank. And what is the margin of BG? That has to be clearly seen. And what is the security of BG? Is it a collateral security or financial security? That also you have to see. And study of the risk involved. So the bankers, before issuing the BG, they have to study the risk involved, because the contract may come into the picture or may not come into the picture. Government disturbance will be more, and even political pressures will also be there. So based on all and everything, even sometimes the public will agitate the contract. So all this has to be studied by the banker. Then only BG will be issued. And study the financial position of the customer. This is also very much important. This I already said, because the customer, they have to reimburse or they have to return the money to the banker, whether the customer has got the financial strength or not. That also the bankers, they will study and analyze the previous commitment in case of invasion. What this customer has done when previously as invocation has taken place, whether the borrower has paid the amount on time or not. That also has to be studied by the bankers. And securities obtained for BG, mortgage, pledged, hypothecated. All this you have to register. If it's an immovable property, you have to get it mortgaged. If it is pledged, just if they issue the bank guarantee in the form of jewels, it has to be pledged. In case if the guarantee is issued on the hypothecation of vehicles, then that has to be hypothecated. And NRE and foreign FCNRB deposits can be taken as collateral security. This is also permitted. And total non-fund amount should not exceed the book value of NRE and FCNR. Suppose if the bank guarantee is given, so if the FCNR or NRE deposit is say 1 crore, so the non-fund limit should not exceed 1 crore. So up to the value of NRE and FCNR, a bank guarantee can be given. And document execution should be proper. The basic, all documents have to be executed properly. And before making the payment, ensure the claim period, because the claim period may be 3 months, claim period may be 2 months. For that also the bankers, they have to get the commission in advance. And other important points, the nature of BGs are, is a new BG can be issued, renewal BG can also be issued. Then the bankers, they can modify the BG, and sometimes they cancel the BG, and sometimes they issue the duplicate BG to the customers. These are the 5 methods based on which the BG can be issued by the bankers. And what is the settlement of claim? So what is the amount that has been claimed by the beneficiary? That the bankers, they have to verify. And for the making the payment, because the credit has to be given to the customer account, the debit has to be done. Sorry, there is no credit. Only the debit has to be made from the customer account, and the beneficiary should be paid. So this is nothing but the transaction should route through the customer account. And otherwise, transfer from non-fund to fund-based and make the payment. So that is also possible. That is, they are closing the bank, that is non-fund, and they are transferring into the fund-based, but this is not mostly done by any bank. So only thing is they debit the customer account and they are making the payment. And recover the amount from the customer, because the payment is being made, that amount has to be recovered from the customer. Whether they receive the payment correctly or not, that you have to see. Next one is, we are going for the LC, letter of credit. And so far, we have covered the bank guarantee. Is it clear, sir? Any doubt with reference to bank guarantee, you can ask me. And if you have not, you can put the question in the chat box. I think this is the maximum extent I covered the BG, and I can hope that you will not get all these details in a book or in a circular. I have compiled everything and prepared this. And this will, I hope this will be useful to you. And next is, I'm going to start with the LC, letter of credit. Letter of credit is a document issued by the importer bank in favor of the exporter. Who is an importer bank? It is your bank. You are the importer. And it has been issued in favor of the exporter. That is the person who is supplying the goods, supplying the machinery. So for the foreigner, your Indian banker is issuing some bank guarantee. Just that bank guarantee is called as LC. Letter which guarantees the creditworthiness of the importer. This says that this party is worth about 1 crore. So you can supply any goods to the value of 1 crore. And if the party has not made the payment, we will make the payment. It is indirectly, it is called as bank guarantee. But it has to be given by the importer bank and against the in favor of the exporter. It is nothing but you are the importer. Because of you, bank gives that you have got the credit worthiness of this much, and we guarantee that he has got the credit worthiness of this much. To that extent, you can supply the goods. If he has not made the payment and the importer fails, then the bank will make the payment. This is the concept of LC. LC is a medium of payment and a document in the international. For the international trade, this is the base. So LC is a medium of payment. So the payment can be made in dollars. The payment can be made in pounds also. So it is a medium of payment, and this can be utilized during the international trade. The currency value fluctuations, LC is also issued. So in order to take the risk of currency fluctuations, LC plays a very vital role. Because if you issue the LC right now, or if you get the money from the bank and if you make the payment from today onwards, you are liable to make the interest payment to the bank. In case if you give the LC to the supplier, and the supplier may say that, sir, the production will take 6 months to meet your order, and the bankers, they collect only 6 months LC commission. It is not interest. In case if the LC is for 20 crores, so just see the interest, but they take only some 1% or some 0.25% commission on the LC per month. Suppose if it is for 6 months, it is 1.5% only. But if you borrow the loan, right now you have to pay the interest at the rate of 10%, and it works out to almost 5%, because if it is for 6 months, the party has to pay 5% of the total. So in order to have the payment benefit, they are issuing the LC. And simultaneously, another thing is, today they are issuing at the LC at the rate of, say, let us take dollar is 74 rupees. Tomorrow, if the dollar rate comes to 72, then the benefit will directly go to the borrower. So the currency fluctuations currency value fluctuations, the party is benefited out of the LC method. So sometimes it may be also in minus also. So you have to be very, very careful. And this is a treatment of LC. That is, developed countries purchase and paid exporters immediately. So developed country means developed countries purchase and paid exporters immediately. Immediately, I don't want LC, but I pay the amount immediately. But if it is for the developing country, so just like India, and with the political stability, we have got political stability. So LC is being issued. So suppose if Indian bankers, they are issuing LC to UK. The UK government, UK bank, they knew that the Indian government is politically stable. So they can discount the LC and they can make the payment to the supplier. You understand the concept? Politically stable. Our Indian government is a government, it's a developing country and with a political stability. But if it is that, then this LC can be discounted by the UK bank and they would have given the credit to the supplier. And second thing is countries with political instability. Now let us go for the Ukraine. Now they are economically sound, but that they are politically and economically, that is previously economically they were sound, politically they were sound. Now due to war, they are not politically sound and they are not politically sound. They are not economically sound. So they are called as, there is an instability at Ukraine. So the bank if the Ukraine bank has issued the LC, then that will not be discounted at India. Till they wait till the money has been paid by the importer. That means LC cannot be discounted by the countries where there is political instability is there. And bankers, they discount the LC of the countries where there is a political stability is there. This is a concept. And opener, who opens it? It is being opened by the importer. It's being opened by the importer. Beneficiary, that is the other person. You are the importer, so you are going to open the LC. In whose favor? In the favor of the exporter. And opening banker, that is bank which issues the LC, that is your banker. He is called as opening banker. And negotiating banker, that is the exporter bank. Bank helps the exporter or negotiator to collect the amount. So that is, they are called as negotiating bank. So your bank is called as, your bank has opened the LC on your request, and this LC is being given in favor of the beneficiary, that is on the favor of the exporter. Confirming bank, the branch of the importer's bank located in the exporter's country. That means Indian bank, for example, Indian bank in Salem, they are issuing LC at UK, and that UK bank, they have to confirm the LC. Indian Bank of UK, they have to confirm the LC. So that is called as confirming bank. So now you once again will read who is going to open LC, it's the importer, and who is the beneficiary, that is the exporter, which is called as opening banker, that is your banker, and negotiating banker, that is the exporter's bank, is called as negotiating banker, and confirming banker is that is a bank which confirm the exporter's country. In the exporter's country, they confirm that yes, this has been issued by the Indian banker in India. So that means the genuineness is also being confirmed by the negotiating banker with the confirming bank. Paying banker. Sometimes this bill would have been discounted and may be paid by some other bank, and that becomes liable to make the payment. Who is going to make the payment? It has to be paid by the Indian bank here. So becomes liable to make the payment. These are the terms that you should know in the LC. Then they are also called as parties of LC. Other types of LC is clean LC and documentary LC, revocable LC and irrevocable LC, confirmed LC, and fixed and revolving LC, transferable LC, back-to-back LC. So, and with course and without course LC. We will discuss in each and everything hereafter. Anticipatory LC. The clean LC and documentary LC. Clean LC means there is no document such as bills and invoice. Nothing is there. LC is being used. Then documentary LC, that is, it has to be accompanied by documents like bill of lading, invoice, certificate of origin, marriage insurance, because the goods have to come from, you have to export the goods from here. Sorry, you are the importer, so the goods have to come from the foreign country. So that is called from certificate of origin. If is it from the UK, then that is a certificate of origin. For that, you have to get this certificate. Marine insurance, if it is being transported through shipping, then you have to produce marine insurance policy and everything. So this is that is called as, that is any LC which has been issued based on the documentary evidence, that is called as documentary LC. And revocable LC and irrevocable, that is revocable LC and irrevocable LC. Revocable LC means anyone at any time can be cancelled, and it is a less dependable one, and no bankers want to transact on that revocable LC. But if it is an irrevocable LC, yes, it is dependable, and every banker depends on it, and everyone wants that because it cannot be cancelled. If the contract is entered, and it cannot be cancelled. What's the confirmed LC? LC is issued by the importer bank and have more than one signature of other bank in exporting country and will not be dishonored. Confirmed, yeah, we will make the payment. So this is called as confirmed LC. And fixed and revolving LC. That is, fixed LC means LC issued for the fixed amount, and if the LC is exhausted, not to be issued anymore. So this is a fixed amount. With this, only up to this we can honor. If the amount exceeds say 5 lakhs or 10 lakhs, we will not make the payment. So this is called a fixed LC. And next one is revolving LC, automatic renewal. If the LC has got extended, suppose if the LC is for a period of 1 year and if the LC is for 10 lakhs and if the limit has expired and every contract is fulfilled, even again it has been just like cash credit account, it has been renewed. So it is an automatic renewal will be there in the revolving LC. What is a transferable LC? The word itself, you can transfer this LC from you to anyone. So transfer to different traders for importing different commodities. And consent of the issuing bank is needed. This is very, very important because you are based on your experience, the bankers they have issued the LC. And if you endorse this to some X, then the bank which issues the LC, they have to confirm the transaction because they have to satisfy the quality of this person in whose name the LC is being transferred. So this is a must in the case of transfer LC and back-to-back LC. That is, it is there for the huge orders and LC can be issued within India as well as at the other countries to procure material. Suppose this I can explain with an example that also I have prepared. So an order is received for 10,000 kg of tea. 5,000 kgs in India, 5,000 kgs from Sri Lanka. One LC backs another LC. There is one LC is for 5 lakh kgs in India, 1 lakh, another LC is for the Sri Lanka. So the supplier will be very, very happy. And with recourse and without recourse. Recourse means the bill has failed. And who is the liability person? The drawer has to make the payment. That is, a bill is sent for collection and if the bill is failed, then the drawer has to make the payment. Next one is without recourse. Bill failed, but drawer is not liable. So with recourse means, yes, I accept. So in case bill is failed, I will make the payment. And without recourse means, I will not be responsible if the bill is paid. Anticipatory LC, just like bail, anticipatory bail. LC is issued in anticipation, that is manufacturing of goods against the orders and shipment. See, I want to get some 10 power loom from you. 10 power loom from you. So, okay, you place the order, but you have to give me the LC. Because only based on your order, I am manufacturing the goods. And if you fail to accept it, then I will be at loss. So you have to give me the LC. So in anticipation of meeting the order, one has to issue the LC, that is called as anticipatory LC. Advantage of the importers are obtain the goods on credit from foreign countries because there is no need to make the payment immediately. The interest is being saved and get loan from bank to repay the cost of the goods. So at the time of making the payment, they can avail the loan from the bank and then they can make the payment to meet the cost of the goods. Goods not available in market can also be imported. If the goods are not available in India, it can also be imported. For that also, this LC can be used by the importers. The importers bank to expand its banking business. So the banking, it goes to the benefit of the importing bankers. They can expand the banking business. Help the importers country for its development. You are the importer, that is India. It helps the Indian government to expand the business. High-value machineries can be imported on installments. If the machinery has got the 20 crores or 25 crores, high-value machineries can also be imported and with the condition that we will make a payment of 2 lakhs or 25 lakhs per month. So this also can be possible. That means the payment can be made in installments also. And purchase of goods at a competitive price globally. Because in China, this is a rate. In UK, this is a rate. This is a rate available at US. So they can compare and they can place the order. So you can purchase the goods at a competitive price. What are the other advantages for the exporter? That is for them, and not you, for them. Assured of payment from the bank. Yeah, I have supplied the goods. I am assured of the payment because it has been assured by the banker. And particularly due to the death and insolvency of the importer. That is you. That is you means the person in India who imported the goods, if he has died or if he has become insolvent, the payment has to be honored by the banker. And creditworthiness of the importer is known to the exporter. The bank confirms that he has got the creditworthiness of 5 crores. Then that is being confirmed by the banker, importer banker to the exporter. Guarantee of payment, guarantee of bank payment assured. Yeah, my payment is assured. And increase in international trade. If you do this, then internationally the trade will also increase. And increase in business from undeveloped countries to underdeveloped countries to developed countries. So this can be done between anyone, from developing country to developed country, from underdeveloped country to a developing country also. So there's an increase in business. These are all stories. No? The studying purpose I have given here, and helps to grow in insurance, transport, and banking. Forwarding agents and clearinghouse, because the goods have to be imported only through the clearinghouse, and there are agents to transact this thing, and their life is also being guaranteed by way of receiving commission. So it helps them to grow also. And this is what I want to say about the bank guarantee. And if you got any bank guarantee LC, I have covered, and also advances also I completed. If you got any doubt in this, you can ask me in the chat box. Next thing I'm going to take up the revenue leakage. We'll have Are you able to see this? Bank revenue leakage. Yes, I shared this. Yes, yes, Bharat sir. And members, have you got any doubt with this bank? I mean, this presentation, if you got any reference to bank guarantee, LC, and advances, you can ask. So now we have to start with the revenue leakage. That is revenue audit we are going to do, because it is one thing that you have to verify during the bank audit. So what are the things that you have to consider, and what is the manner in which you have to verify the revenue leakage? So in LFAR, they say that has the test checking. So they use the word test checking. That means you are permitted to do the test checking. You need not do the 100% thing. So test checking of interest, discount, commission fees, etc. reveal excess short of material amount. So here you have to see the two things. One is test checking. Second one is material amount. If the difference is only 10 rupees, you need not bother. If the difference is 1 lakh, you have to give. The difference is 10,000, it is also material. So the materiality, it depends on the amount that you have calculated, you have found out during the audit. So test checking is permitted in the statutory audit. This is the exact word of LFA. Next is, has the branch complied with IRAP norms? Yes, yesterday we have discussed IRAP norms. So if you find any NPA, you have to say that yes, the branch has not complied, because as even we can say that branch has complied IRAP norms, except you can give the list of NPA. Sorry. So here we have already discussed NPA. So this point you have to cover here. And once if you identified an account as NPA, no further interest has to be charged in the account. And again they say that test check of interest on deposits. First point is interest. Interest means advances. Third point is test check of interest on deposits revealed any excess or short. Fourth one is, does the bank have a system of estimating and providing interest accrued on overdue, mature, unpaid, unclaimed term deposits, including the deposit on the deceased persons? So Point number 1, it is directly related to advances. Point number 2, it is the NPA classification. Point number 3 is the interest checking on interest of deposits. And third one is the overdue unclaimed. That is, the deposit is there, it was overdue and nothing is being paid. How to calculate the interest, whether the branch has followed the head office norms or not, that you have to report. So it's very, very clear. It's a test checking basis, you have to do it. Of checking in statutory audit, it's a test check. In content audit or revenue audit, you have to do the interest checking as per the sanction letter 100%. Now, what are the areas in profit and loss account? Income side. Now you have to forget all loans. You are going to concentrate on the P&L account. What's the income side? Interest collected on advances. Interest collected on the interbank funds. That we will discuss. What is interbank funds? I will discuss. I will tell what's the commission on brokerage. What are the other receipts? That is there in the P&L account credit side. Profit or loss on the exchange transactions. And the CBS mature deposits are not renewed automatically. So there is no overdue interest. Your view, sir? Sir, even if it is not renewed, and when the party came and if they renew, then the bank, they have to give the interest. This is the normal rule. And mature deposit, if they are not renewed automatically, okay, if it is not renewed by the party when they came, and no further interest has to be paid. In case if the party has come and he has renewed it, then the payment has to be made by the banker to the party. This is a rule. I think who was raised this question and Subarao sir. Yes. Is it SP interest or SP? Yeah, it is a SP interest. Normal rule is till the date of renewal, they pay you SP interest. They will not pay you the deposit interest. They pay you only SP interest. Even in NSC also, National Savings Certificate, which has been issued by the bank, post office, they give you only SP interest. They will not give you the interest that is applicable for the deposit. So they gave you all the banks, they gave only the SP interest and not the real interest. That is not the full interest. Next one is, we are going to what are the basic area to see this thing. First thing, you have to get the bank's service charges circular. So this is the first thing that you have to go and ask. Sir, I want service charges circular. So no one see, I can say that you may be seeing the advances, but you are not seeing the deposits. Please. You have to ask for the service charges circular. This is a very, very important thing. So once, suppose we are going for Indian Bank, for example. If you got a circular Xerox at one branch, suppose if you have been allotted some 3 branches, and if you are going there, you can carry that. So only once you have to see the service charges circular and you have to go through it. At least you have to spend some 2 hours to read all the hits. And interest rate changes on deposit and advances, whether the same is being properly recorded in the master area. In the advances, there is a master page there, they have to record it. And if it is not there, then you have to see that the interest rates have not been changed. So you have to ask what are the interest rate change during the year towards deposits and advances. The managers, they will definitely give you with the circular evidence. And sanction letters of each loan. See, in some sanction letter, they say that MCLR, there is a lending rate plus 2%, lending rate plus 3%. So this lending rate, MCLR, that is a lending rate you can get from the sanction letter. So that means the interest rate has been fixed based on the interest rate that has been mentioned in the sanction letter. So you have to go through the sanction letter and arrive at the interest rate for each loan. And you have to call for the previous auditor's report. What are the previous auditor's report? You have to ask for the branch statutory audit. That is whether the last year branch statutory auditor has commented against the revenue of leakage or not. That point you have to ask. And you have to ask the concurrent auditor report and revenue auditor report, other auditors, suppose say RBI inspection audit, and they would have commented against some revenue leakage. That report also you have to ask. And what are the, now we are going for the profit and loss account expense side. So far we have seen the credit side. What are the expenses? Interest paid on deposits, because that is an expenditure to the banker, and interest paid on RBI borrowings. Suppose if the bank has borrowed the loan from RBI, then they have to make the payment to RBI. So that is interest paid on RBI, interest paid on call borrowings. Sometimes they would have borrowed some funds on short-term period, say for 3 days, 2 days, or 4 days, or 1 week, they would have borrowed from the other banks. So that also you have to take note of it. And interest paid on other borrowings. Other than that, that means even they can borrow fund from the, based on the head office norms, they can borrow money even from the public also. But normally this will not be there. Because normally this will not be there, and they can use it. Now, general charges. What are called general charges? One second. General charges are administrative costs, then law charges, all are coming under the category of general charges. Now, interest earned on advances. That means the bank has given the loan. Now the interest has been earned by the advances. So for this, please read the sanction letter and arrive at the interest rate, because that will be clearly mentioned in the sanction letter. If there is any change that has to be recorded in the system, that is every change has to be recorded, and go to the interest rate pages. Yeah, this is the working that you have to ask. Otherwise, if the bank, they are not able to give it, don't worry, you ask the branch to open the interest working page. So that's a separate, this system you can find, because I am not well versed in a system, but you can ask the manager, sir, I want to see the interest rate applicability for this advance. So this is a back end work. You can see they use the interest rate application daily. So what is the interest rate? They charge for the daily balance. You will get a list. So you can ask for the interest working sheet. You can, a few bankers, they say that it's an interest working sheet, and some bankers, they say that interest rate pages. So you can ask. And normal interest rate is applicable for regular and operating. So that is, the limit is regular and the limit is operative correctly, then normal interest rate has to be charged by the bankers. And no excess interest rate is allowed other than those mentioned in the sanction letter. So normally the bankers, what they will do, I will tell the modus operandi. The interest rate is 7%. They don't want to be penalized. They don't want to be penalized. That is bankers. What they do, instead of 7%, they fix 7.25. Suppose if they've forgotten, in future, this 7.25 would save them. So excess interest also they have fixed in the chart. So if you're a banker, you see from your angle, can you pay 7.25 instead of 7%? No, you will not make payment. So if that is there, the excess interest charged by the banker also you have to report. And read the concession rate, interest rate, if any. So for this, the bankers, they have to do the rating exercise. So normally interest rate concession will not be given to the customers. Due to some good operation, they approach the bankers. Sir, other banker, they are giving at the rate of 6.8%, but you are charging me 7.2%. Can you reduce the interest rate from 7.2 to 6.8? Sometimes due to the business strength, the banker, they say that, okay, we will reduce the interest rate to 6.8%. This is a concession interest rate. For this, they have to do some rating exercise. So based on that, they are giving for the interest rate concession. The head office has given a letter, to the branch manager. So you have to ask for that letter and you have to read it. That is concession interest rate letter. You have to verify. Next thing is It is applicable for what? For term loans, regular. If it is regular, you can charge, and for holiday period interest, you have to charge the regular interest. And the cash credit loan, the loan is regular, you can charge the regular interest rate. And for forex loan, that is in the form of packing credit loan, bill discounting, regular interest. And one-time settlement order and its applicability. This is very, very important. Here I mentioned about OTS. So that's why I think yesterday I said, we want to see the loans opened during the year and closed during the year. One. You have to see the loan closed during the year. The loan may be closed out of genuine source, or sometimes it may be under settlement. They pass the settlement. That is called as one-time settlement order. But when they say that they give grace time of 2 months, so they arrive at the amount and they add 2 months interest to the OTS, that is to the amount. If the settlement is being delayed by 1 month, say 3 months, then the bankers, they have to collect another 1 month interest. So if the settlement is done within the period, then it is okay. If the settlement has exceeded, so instead of 2 months, the party has made the payment in 5 months. So additional 3 months interest, the bankers, they have to collect from the party. Okay, this is called as one-time settlement order. Here, with reference to one-time settlement order, I want to tell, and this is a very big practice-prone area. Even I have got some 3 offers from the from various parts, because few members, they attended the session and they gave the work to me, because it's a professional opportunity to me, because I know how, because we know what are the rules and regulations. Based on that, we have to play. I approached and I've been, it is a negotiation. I hope I'll be getting a very good amount. But here, I want to say a very important thing. And if the branch has sanctioned the loan, then branch has got no power to issue the OTS one-time settlement order. It has to be issued by the next higher authority. If the loan is being sanctioned by regional office, it has to be issued by the zonal office. If the loan is being sanctioned by the zonal office, it has to be issued by the head office. In this manner, the one-time settlement order is used. Sometimes the power has been given to the bankers. So up to 1 lakh, you can issue the OTS order. Some delegated powers will also be there. Even the loan is being sanctioned by the branch manager, they can go up to 1 lakh. But in my case, this has happened in Chennai. That is, it has happened some 7 years back. I went to the statutory auditor and some 82 lakhs have been given under OTS for some 70 parties. For 70 parties, some 82 lakhs have been waived. I asked who has passed the one-time settlement order. The manager said, I have passed the one-time settlement order, and at that time there was no discretionary power. He has issued one-time settlement order. And the one-time settlement orders, they say that if the loan is being sanctioned by the branch manager, then that has to be, that branch manager has no power to issue the OTS order. It has to be passed by the next controlling authority. Even now, the rule provides. In that branch, the manager said, sir, I have, at the time when the loan was sanctioned, it was sanctioned by scale 2 manager. And now I am scale 4. So I have got the power to issue the one-time settlement. But the circular says, if the loan is being sanctioned by the branch manager, then it has to be, OTS order has to be issued only by the next authority. Then I invited one customer and asked him, sir, who are you? I asked this manager, I showed my hands to the manager and I asked the customer, sir, who is he? He said, he's the branch manager. Thank you. Now you read the circular, sir. He said, you are the branch manager. He never said you are a scale 4 manager, not scale 5 manager. The rule says that if the loan is being sanctioned by one branch manager, it has to be, one-time settlement order has to be passed by the next higher authority and not by you. So this is the information you should know. So here, the one-time order you have to see. So up to the one-time settlement period, interest will be calculated. If the one-time period is being extended, then additional interest has to be charged. This point you have to see. So what is the interest applicability? You know how to calculate the unrealized interest, and interest applicability for the NPA. Up to the date of NPA, only interest rate you can charge. After that, you are not supposed to charge the interest rate. Now, this is also another interesting class. Penal interest. Penal interest on what? So for this, you have to refer the sanction letter. A sanction letter, yesterday itself I said, has got 4 columns. One is one about the customer. Second one is pre-condition disbursement. Third one is post-condition disbursement. Fourth one is general condition. In the general condition, they mentioned that if the party has not fulfilled the sanction terms and conditions, he will be charged penal interest other than the regular interest at the rate of 1% to 2%. It is per annum. It is not flat. This point you have to treat. For number of days delay, you have to charge 1% per annum or 2% per annum. It should not be charged as 1% or 2% at a flat rate. One. And the second thing with reference to charging of penal interest, what you have to remember is there are so many deficiencies that are so many mistakes that have been committed by the party. He has not submitted the stock statement, data statement, financial statement, even a loan has not been renewed. So for each and every default, you are not supposed to charge the penal interest. So only once you have to charge the penal interest. If the account is regular, you can charge 1%. But overall, if the limit is not renewed, the bank is charging 2%. That means there is no applicability of stock statement, data statement, financial statement, because the limit is 0. So only once you have to charge the penal interest. But if everything is regular and if the party has committed one violation, you have to charge the 1% default. Installment is overdue. Suppose today you have to pay 1 lakh and it has been delayed by 17 days. For that 17 days, for that installment, the bank non-renewal of the limit. You know that the limit has to be renewed within a period of 180 days from the original due date, and till the date of renewal, the bank they have to charge the penal interest. If the outstanding balance is more than the sanction limit, for that period, so the outstanding balance is say 10 lakhs. For some 2 days, the outstanding limit goes to 2 lakhs, 12 lakhs. That means for the excess amount of 2 lakhs, they charge the regular interest plus penal. They charge the regular interest for the entire limit, but for that excess 2 lakhs, they charge penal interest of 1% or 2%. This already we know. Non-submission of stock statement, data statement, penal interest has to be charged. Non-submission of other statements, some QA statement, and if the bankers say that you have to submit the GST returns, that is also a statement. If they are not submitted the GST return, also they will charge the penal interest. So everything it is depending on the sanction letter. Non-creation of charge. If the EM is not created, if the MODT is not created, if the ROC charge has not been created, then the penal interest at the rate of 2% per annum will be charged on the account. That is there clearly stated in the sanction letter. Then non-receipt of external rating. So as per the norms, the bank, that is the customer, has to obtain a credit rating from the external rating agent that we have already discussed yesterday, external rating agency from the list approved by RBI. If they have not submitted the external rating, then the penal interest has to be charged till they submit the external rating. Next one is outstanding balance in excess of DP. Suppose if the outstanding balance exceeds the DP, till they regularize and till they bring the balance below the drawing power, then the bankers they have to charge the penal interest for the excess amount. Financial statement. If you go through the sanction letter, you can find that the audited balance sheet as on 31/3/2021, for example, has to be submitted on before 31/12/2021. That is before end of December, the statement has to be submitted. And if it's not submitted, then the penal interest has to be charged on the outstanding balance till they submit the financial statement. Most of the bankers, they are not following this. If you are a concurrent auditor, if you are the revenue auditor, you have to observe this and you have to put this in your report. I vouch that 99% bankers, they are not charging any penal interest for the non-submission of financial statements. And NPA advance, and if the NPA advance is there, and if it has been upgraded, then it has to be interest has to be charged with the penal, because the delay is there. For the delayed period, the interest has to be charged normal rate plus the penal. If any loan is pre-closed, there also penal interest can be charged by the bankers, and others, that is non-fulfillment of other terms and conditions as per the sanction letter, if it is there, then the penal interest will be charged. These are the places where the penal interest can be charged. I have almost covered everything here, and now I am going for the interest collected on interbank funds. I'll tell what is interbank funds. Your customer has deposited, say, I have submitted some 2 crores of checks. I have sent the check for collection. Okay. Say, we can say in another way. Suppose I have issued a check to you, say 2 crores. Where you submit the check, you submit to your customer, you are a bank. And the bankers, they submit the check to your bank. And your bank has to debit your account and they have to make the payment to you. They have got the fund, but they debited your account. But when they made the payment to the other banker, they are not having fund. So I think I'm not confusing you, because there's one fund called clearing fund. For some bank I have to pay, for some bank they have to pay me. The net figure, if the amount received from the other bank exceeds the payment, then I am safe. That is, my banker is safe. If the amount received from other bank is, say, 2 crores, paid my other bank received is 2 crores, and you have to make payment of 4 crores or 5 crores. That means you have got shortage of 3 crores. That is, your bank has to pay 5 crores, and other banks, they have to pay to your bank is 2 crores. That means the banker has got a liability of 3 crores. What they will do, they borrow the fund from the other banks, clearing fund. Those banks which has got surplus, they say that per day you have to pay me 50 rupees per lakh. Suppose if it is 1 crore, they have to pay 500 rupees. If it is a 500, you have to pay 5 crores, then you have to pay 2,500 rupees as interest for the 1 day fund utilization. In case if the fund has been honored tomorrow, then the transaction is over. In case the fund has been honored after 3 days, that means only 1 day interest has been paid, and for the remaining 2 days, it's an income leakage. Have you understand this? Your bank, see, it's a clearing fund. It's a clearing thing. This bank, they are sending the check for collection. Other banks, they are sending the check for collection. So when other bank, they send the check for collection, your bank has to make the payment. When you send the check for collection, other banks, they have to make the payment to you. For example, other banks, they have to make the payment only to the extent of 2 crores, but you have to make the payment of 5 crores. For example, you have to pay 5 crores and others have to pay 2 crores. That means you have fall short of 3 crores. You are not having funds in your account. What you do, you borrow the fund from other bank, which has got a surplus in the clearing. Then for that lending of 3 crores to your bank, the bank, they charge normally in Salem, they are charging around 50 rupees per lakh. So for 1 lakh, they are charging 50 rupees. For 100 lakhs, they are charging 500 rupees. And for 3 crores, it is 300 lakhs. So they are charging 1,500. This is for 1 day interest. Now, the payment, I say that my bank, my head office has to honor the commitment to your bank. If they honor the payment after 3 days, then there's a leakage, because I paid only 1 day interest, but the payment is being done by my head office after 3 days. So for additional 2 days, the bankers, they have to make the payment to you. So this is called as interbank collection. That is interest collected on interbank funds. Sale of clearing house funds. Is it clear? And number of days given, it's only 1 day. And return date, you have to see the return date is 3 days, and you are given only 1 interest, and 2 days interest, you have to make the payment. And per lakh, what is the cost? That is in Salem, in my area, it is 50 rupees per lakh. And based on that, the interest is being paid to the other banks. So it is a charge to the P&L. Sometimes you may collect from other bank. That is also an income to you. So you can pay, you can get it. So this is an interest collected on interest bank funds. Now interest earned from RBI. Here you should know the very, very important term of repo. What is a repo rate? If the RBI is giving fund to the bank, RBI is giving fund to bank. Otherwise, we can say that if the bank borrows the fund from RBI, the bank charges interest for that amount. So that interest is called as repo rate. That is interest charged by the RBI on banks for its lending to banks. The interest rate is called as repo rate. Sometimes RBI has borrowed fund from the banks. So banks, they will charge the interest on RBI. That means RBI is paying interest to other bank. That is called as reverse repo rate. Is it clear, sir? Repo rate, what is repo rate? It's a rate charged by RBI on bank for its loan. That is called as repo rate. Reverse repo rate is the interest rate paid by RBI to other bank. That is called as reverse repo rate. Now, going to the presentation, lending to RBI. Your bank is lending the money to RBI. So RBI has to pay the interest. That is called as reverse repo rate. And do the reconciliation with the RBI statement. That means you have to call for the RBI statement and you have to do the reconciliation. Next one is foreign exchange transactions. Here, I want to tell about the FEMA, because FEMA is being FEMA Act, Foreign Exchange Management Act, is being passed by the central government. And in FEMA, they authorize the RBI to look after the foreign exchange transactions. The RBI cannot do the foreign exchange transactions directly. It has to be monitored only by the authorized dealers. And the authorized and all those authorized dealers are appointed after getting the license from RBI. So these authorized dealers, they transact all the foreign exchange transactions. They are allowed to buy and sell the foreign currency. A banker is an authorized dealer, for example, and if they purchase some dollars, say at the rate of 80, for example, 80 rupees, and if they sell at the rate of 81 rupees, that means per dollar they are getting 1 rupee profit. That has to be treated as the income of that bank. When they sell it, and if it is a loss, it is an expenditure to the bank. Instead of 80 rupees he has purchased, when they sold, the rate comes to 79 rupees. So that means the bankers, they have lost 1 rupee. That's a loss. And at the time of bill collection and bill discount, sometimes the bills have been sent for collection and the payment has to come. And for that, they are charging some commission. To bring the foreign exchange from foreign country to you, they charge some commission. So that is an income to the bank. And when they discount the bill, that means they take some 10 days interest. And when they realize, if it is a discounting, the profit goes to the customer. When it is being purchased, the profit goes to the banker. So thereby also they are taking some benefit, or thereby also they are getting some profit. Now coming to the commission and the brokerage area. Check and bill collection charges, they are charging commission on RTGS and bank guarantee commission, which we have discussed, including the client period, we have to charge. And sometimes they enter into contract, for that also they are charging some fees. Issue of LC, you are getting some commission. The bankers, they are doing the share business also. For that, from the share market, they are getting some brokerage commission. And foreign exchange, sometimes foreign bankers, they want the information about you. So for that, they collect the fees from you and they are giving a favorable report or unfavorable report to the. So for the foreign exchange, also for the foreign exchange, foreign business, also for the For that is export business also they are providing information. For that also they are charging some commission. And commission on government business. What is called as commission on government tax collections and GST collections. For that the government is paying commission to you. And commission on other permitted agency, including consultancy and services. So normally we are preparing the project report. You know who is the real competitor? The bankers are the real competitors. If the project is say 200 crores or 300 crores, they have got a team of project people and they prepare the report and they are submitting and they are getting the fees. So this is on consultancy basis also they are earning some commission. Brokerage on securities and fees on insurance referral. Suppose if they refer the insurance just like LIC, you can refer even the health insurance also, you will be getting some fees on the referral because they are introducing the customers to the LIC. They are introducing the customers to the some Star Health and that. Other the LIC and Star Health, they are paying commission to the bank. Commission on referral mutual fund. Suppose if any business is done by the bank, the concept of mutual fund also, the mutual fund company, they are paying commission to the bankers. And income from rendering other services like custodian, demat account, investment advisory, cash management and other fee-based services. Anything, if you want services, they can give the service and charge the fees. And processing fee. If a loan, suppose in case if any loan is being sanctioned, for that and if they for the entire process they will pay the fee. That is called as processing fee. In the processing way, there are two types. One is upfront fee and the regular processing fee. The processing fee the party has to make after sanction of the loan, but before availment of the loan. But upfront fee is a fee paid by the borrower, by the applicant to the banker at the time of submission of the application. This processing fee will be charged by the banker after sanction of the loan, but upfront fee is a fee paid by the borrower. That is on the application itself, they have to enclose the upfront fee. So they have to collect as per the sanction letter or as per this. And sometimes they say that on housing loan for this period, no processing charge will be there. Is there any concession that has been given to the customer? That also you have to see. And upfront fee, I said, is upfront fee along with the application. The party has to make the payment to the banker. That means if the loan is not sanctioned, then upfront fee will not be repaid. So this is a very, very dangerous thing when you make the payment through upfront fee. And for the following loans, packing credit charge, processing charge has to be collected. What are that? Term loan, housing loan, personal loan, cash credit loan, forex loan, ad hoc sanction. For each and everything, any loan, it's a very simple thing is any loan, processing charge has to be collected by the bankers. Inspection charges. What is the inspection charge? See, the manager has to go and visit the unit at least once in a quarter as per the sanction letter. Sometimes they have to go on monthly basis. Sometimes you have to go and do the inspection for the stock audit. So for the stock audit, the account is debited as stock audit fees. But if the manager is accompanying you, they will write inspection charges. Where we can find, there is one register called as inspection register. From the inspection register, you can note down anything. When he has gone, how many hours they spent, whether he has gone in own vehicle or whether he has gone in car or not. So all this you have to collect it only from the customer. So for this, please read the sanction letter, and there is a minimum of 4 inspections that is on quarterly wise. They have to write the account and see those accounts are debited from the that has to be calculated from the customer's account, and you have to see the inspection register, and you have to see whether the corresponding entries have been recorded in the customer's account or not. That you have to see. Next it is other charges. What are the other charges? Mobile banking charges, credit card and debit card charges, locker rent, renting of properties. That is if you transact between the branches, there is service transaction for the charges, debit for transaction at other branches. You are there at Salem, and if you go and did the same transaction in Coimbatore, for that they charge some transaction fee. That is also another charge that they are collecting it. Profit on sale of investments, profit or loss on revaluation of investments, and profit on sale of land, building, and others. Sometimes the bankers, they have got the property they sell, and profit on sale of land also they have to consider. Profit or loss on revaluation of fixed assets, income earned by way of dividends, and solvency certificate issued by the bank. This is a new thing that you have to be very careful, because sometimes when the contractors, when they approach the revenue authorities, they charge more. They charge even 1 lakh or 2 lakhs. But when you go to the banker and when you say that I want solvency certificate, the bankers, they charge around 10,000 to 15,000, but it depends on the solvency value. So solvency certificates for also they are charging some fees. For the commitment charge, what is a commitment charge? Commitment charge is a charge charged by the banker towards the unutilized portion of the advance. Suppose the loan amount is 1 crore. There is one tolerance level. That is 85% of the loan has to be utilized per quarter or per month or per year. And even few bankers, they say that commitment charge has to be collected on all those advances which exceed 5 crores. That means if the loan is below 5 crores, no commitment charge rule is applicable. But normally, there is one column called tolerance level. That is, the party has to compulsorily utilize the limit to the tune of 85%. So that is coming under the concept called commitment charge. If it has not utilized, he has only utilized 60%. That means 40% of the limit has not been utilized by the party. For that 40% of the limit, the bank charges 1% per annum to the extent of unutilized portion. So that means only 60 lakhs they utilized. So for 40 lakhs, remaining 40 lakhs, they charge 1% per annum. If it is for quarter, you have to do it for 3 divided by 12. If it is for 6 months, you have to do it for 6 divided by 12. If it is for per year, you have to you can do it for per year. So this is a concept called commitment charge. Please be careful. In most of the banks, they are not following, they are not getting this commitment charge, because sometimes the other, that is customers fund, maybe will be with you. That is it maybe they are having some credit balance. Bankers, they are having some credit balance. That is your fund is there at the bank. This in a current account, say to the tune of 10 crores, but you have availed a loan of 5 crores. You are not utilized the full limit. So can you recommend 5 crores into 1%? No. As per rule, you have to charge, but bankers, they will not charge, because they are having 10 crores in the current account of that part. So commitment charge, the bankers, they are taking very lenient view, but be careful, you have to give a specific comment on the commitment charge. Then calculation of the miscellaneous income. What are all coming under the miscellaneous income? This I'll just go fast. MICR check, issue of passbook, balance certificate, shop payment instruction, balance inquiry, and account closure before 12 months. Suppose if you open the account and if you close before 12 months, you have to charge some charges, check return charges, signature verification, no due certificate, issue of DD, pay order, and banker's check, and revalidation of DD, pay order, banker's check, issue of DD, then duplicate issue of DD, pay order, banker's check, collection of the checks, collection of bills, purchase of DD and outstation checks. For that also they are charging some income, and presentation of response bill, minimum balance, non-maintenance of minimum balance also bankers, they are getting some income. Number of entries in SB, if it exceeds 50, because in SB account, suppose the entry should not exceed 50, you can have an SB account, and if the entries exceed 50, the bankers, they charge some commission for that. And charges for deletion of deceased person. Sometimes you have to change the name. Suppose the name is in the name of the father, and his son would have gone to the bank and say that I am the legal heir. Please change the name from my father's name to me. So for that also the bankers, they are charging some income. Sir, is there any period limit? Is there for unutilized portion? Bharani, it is for the quarterly basis they are doing it, and if the quarter, if they are not utilized the limit, then they charge the commitment charge.
Every quarter we have to verify.
So it depends on the sanction letter. You go to the circular and see whether the same is being done on quarterly basis or half-yearly basis, but everything it depends on the sanction letter. And if the sanction letter says that no commitment charges have to be collected, you need not commit. You need not collect it. And charges for the deletion of the name. Okay, next one is standing instruction, because every 15th you have to make payment. Every 15th of this quarter you have to make payment to LIC. That's a standing instruction. They are charging something around 10 rupees or 15 rupees per standing instruction. And cash handling charges. Suppose if you remit huge cash, they are charging some cash handling charges and safe custody charges and collection of interest and dividend charges for transfer of shares, locker charges. For the locker rent, their bankers, they are collecting income. For their lockers, because there are 3 types of lockers. One is small, medium, and big. And according to the size, they charge some rent. Sometimes few lockers will be vacant, and sometimes locker rent will not be paid by the party. Sometimes these lockers have to be break open. Sometimes the party has lost the key, and the bankers, they charge some break open charges. They collect the same from the party, and that has been given credit to the P&L account. And locker, only 12 operations are allowed. This is a rule. You are allowed to go daily, and you can operate the locker daily. But as per now, it is only 12 operations are allowed. Key is lost, then the bankers, they collect from the customer as the break open key concept. And solvency certificate, this we already discussed. Interest certificate, if you want any interest certificate, only once they give, and if you want another interest certificate, they will charge. And remittances of RTGS and NEFT, for that also they are getting. For the account maintenance charges, that is folio charges, they are doing it. And ATM charge, suppose if you are having some ATM card, there also they are charging some commission. And if you have misplaced the deposit receipt, and if you want duplicate deposit receipt, for that also they charge some fee. Payment of deposit amount through some other banks. So if it is done from, say, Canara Bank to Canara Bank, no charges. If the deposit has been deposited at Bank of Baroda, and if they are making the payment to the Indian Bank, and Indian Bank, for that payment they charge some fee. Now interest paid on deposits. So far you have collected, now you are paying it. So for that you have to see the head office circular, and there is an interest difference between normal citizen and senior citizen, and there is a difference between normal citizen and staff also. Staff has got 5.5% more or 1% more. See, in one of the banks where I've gone, I noticed that the regular deposit holder has got the interest in the staff rate. The staff rate, suppose if the regular interest is 6% for the normal customer, for the staff they are giving them 7%. So the staff interest rate is being applied and paid to the normal customers. It's a very big income leakage I noticed. So please be careful. And whether the bank has paid the normal interest rate or the senior citizen rate, and interest has to be paid on SB and not on current account. And for fixed deposit, reinvestment deposit, recurring deposit, FCNR, NRE deposit, for that you have please refer the bank circular and they will pay you. And for the inoperative SB, interest will be credited, and at the time of reversal, no charges will be allowed. No charges will be charged. For the overdue deposits, the interest will be paid only if it is renewed. For the mature deposits, interest will be paid by the banker only when it is renewed. And pre-closure of deposits, suppose if the deposit is being put for 2 years, and if the depositor wants the money in 6 months, so the bank, they charge the penal interest at the rate of 1%. From what? It is not from the 2-year interest, it is for the period rent. What is the interest rate for the 6 months period minus 1%, then they are paying the amount to the party. So for the pre-closure deposit also, the interest payment will be paid, but at the penal, with the cost of penal interest. See, in one of the banks, I will tell the formula, that is how to calculate interest for the reinvestment deposit. But when I did the exercise, but is every year in the system calculates interest payable on the deposit on accrual basis. Suppose a reinvestment deposit is there, but the deposit is not due. But the branch, that is the bank, they provides interest provision for the ending, for the year ending 31/3/2021 or 22. So if there is any mistake in the interest accrual provision, then the profit will be affected. See, in my case, when I worked the deposit interest rate, I found that the computer rounds interest rate instead of interest amount. Computer rounds interest rate instead of interest amount. That is system. That means 5.25, the provision is made to the tune of 5. For 5.75, the provision is made to the tune of 6%. That is totally wrong. That means whatever be the amount provided by the banker, it is wrong. So you have to see whether the current interest rate provision has been made by the banker at the P&L account or not. That you have to see. TDS applicability for the interest, you have to, the bankers, they have to deduct TDS. This is the formula. You can, if you have not calculated, please take the calculator and explain this, because this will be the basis based on which you can calculate the reinvestment deposit. Here the formula is R divided by 4 plus 100 into directly enter the deposit amount. And if it is for 1 year, there are 4 quarters, then you have to press the percentage 4 times. For example, and if you have got calculator, I think anyone has got the calculator, please take it. I'll give some 1 minute time, you take the calculator. And if you understand this formula, this will be definitely useful to you. Because this saves a lot of your time during the audit when you verify the deposits. R is rate of interest. So 12 divided by 4 plus 100, you press 2 times, I can, so I'll tell here, rate is 12, just plus 12 divided by 4 plus 100 for constant 2 times plus X. Then the deposit is say 1 lakh. Straight away you fix 1 lakh, and it is the period is 1 year. So 1 year has got 4 quarters. Just press 4 times. 1, 2, 3, 4. The maturity value is 112,550. That is 1,12,550. That is interest is 12,550. Has anyone did this exercise? Anyone has this exercise? This is a formula. If you want, you can take the screenshot, and this will be useful to you. 12 divided by 4 plus 100 plus 100 into 1 lakh plus the percentage for 4 quarters. If it is for 1 year. Has anyone did this exercise, sir? Okay, I think I have not received any answers because there are some 14 members are here. Sir, what is the difference between overdue and mature deposit? Yeah, Subharav sir will come. After this, overdue means mature. Today it is mature. It's a mature deposit. Tomorrow it is a overdue thing. So today is a mature deposit. Today on the date of maturity, it has to be renewed. If you give automatic renewal instruction, they will review the mature deposit. And overdue, it's matured. It is overdue, but no one has come and claimed the deposit for 2 months, 3 months, and it is there. So if the deposit goes beyond the due date, beyond the mature date, that is called as overdue deposit. And now interest paid on RBI borrowings. Now the bankers, they borrow the fund from RBI and they are making the payment. That is called as repo rate. I think we have already discussed about the repo rate. For this amount borrowed, and see the bank's resolution to make the payment. And now interest paid on call money, that is on temporary from the market, say from some, even from the private sector banks, they borrow some funds to meet some additional urgency, to meet some urgency money. So that is called as paid money on paid interest paid on call money or at short notice. For that, to borrow the money from the other bank, the head office has to give the permission, and you have to see the interest rate, and you have to see the deposit receipt, because you have to see the deposit rate and see the overdue interest is also being paid, because when they pay the overdue interest, when you renew it, they pay the overdue interest. And now interest paid on other borrowings, that is from others, that is borrowed otherwise than as a deposit and borrowed in the form of a bond. Suppose if the banks, they are issuing any bond, so that is a money that they have to pay. And for that, even they can borrow in the form of debentures also. They say that all are included in the other borrowings. You have to check the P&L account, whether the same thing is being recorded, whether the payment that you have for the payment for the borrowing in bond, whether you pay the interest or not. For that, please refer the P&L account. What are the general charges? Just I'll go and stop the revenue presentation, then I'll go to the other thing. Payment, so nothing but when you go to the P&L account of the bank, these are the things that you can find. Payment to the provision of employees, rent, taxes, advertisement, publicity, debit is almost, it is not almost, it is the actual P&L account debit. Director fees and allowances, law charges, postage and telegrams, all these are the debit of the P&L account. So that means you are a revenue auditor. Suppose we are going as a revenue auditor, you have to plug all the holes. You have to plug all the holes. So before the audit, the bucket has got a lot of holes. Now after the audit, the bucket is full and no holes are there. So this is what I want to say about the revenue audit, revenue leakage. So as per the LFAR, you have to do the test checking. And if you are going for the revenue audit or concurrent audit, you have to do 100% working, or as per the terms that you're, as per the appointment letter, whether you have to do for this 50% checking or 100% checking, you have to do the revenue audit working. So with this, I'm going to stop the presentation of revenue audit. I'm going to the next topic, and which will be, I think you can get from records. What are the records that you have to see? That is also a very, very important thing. What are the records that you have to call? And Sanjana, this is the question you have asked me today. And what are the records that you have to verify? Records and registers that you have to verify. I've got a very big list. Whether this PPT is visible, sir? Whether this PPT is visible? Yes. Thank you, Subbarao sir. I think you are the first man to hit. Yes, it is. What are the records and registers? This is a very, very important thing. So you have gone to the banker. And what are the records that you have to ask? What are the registers you have to verify? And this also you cannot find from anyone. So on my experience, I have prepared this, and even sometimes some registers I would have missed it. And if it is there, then you can put it in the chat box so that I can add this in my presentation. Cash records and register. What are the items that are related to cash register? Today, I think yesterday we have seen this. Vault cash register, that is cash stock register, and counter cash register, that is a cashier who is handling the cash. And third one is ATM cash register, because if any money is being deposited at ATM, that has been recorded in the ATM cash register, and cash in transit register. So money which has been sent to the other branch or chest branch, that has to be recorded in cash transit register. And this is the first 4 items in the cash register. All these registers you have to call and you have to verify. And chest branch register. Suppose if you are going audit for the chest branch, that's one cash register called as chest branch register, but you are not supposed to do the chest branch audit. Key moment register, this we have already discussed for the joint holding of the keys. Cash balance certificate, this is a certificate. After verification of the cash, you have to get a confirmation letter from the bank saying that this is the cash that we had on this day. So cash balance certificate that you have to take. Cash retention limit, this also we have to say, the bankers, they have to produce the cash retention limit certificate. This is a record. not a register. Cash insurance letter, it's a record. Insurance policy that the bank has taken for the cash. And now we are going to the jewel loan. So far we have seen the cash. Now we are going to the jewel loan. For that jewel loan application, opening and close. You are having opening, you can see the opening application, but you have to see the closing application also. Jewel loan stock register. Jewel loan stock register. So this is also register that you have to ask, you have to verify, you have to get the quantity from the ledger and take the, you have to tally this with the jewel loan stock register. Tray-wise stock book auction register. Tray-wise stock. So each and every tray, there is one book. That stock book also you have to take. So in this tray, what is the quantity that they fixed? They put that is there, that they will record in this tray-wise stock book. When they release it, they debit the quantity. When they put it, they add the quantity. An auction register. You have to ask for the auction register. There's another register called auction register. In auction register, all the proceedings will be recorded. The register is called as, for the auction, they have to make the paper advertisement. For that, any advertisement is being given, for that you have to ask for the newspaper advertisement register. Newspaper advertisement register. Next one is jewel loan stock certificate. It's a record. What is the jewel loan? That is that we have verified number of packets. You have to get a certificate from the bank. It's a record. And appraisal record. What is the appraisal record? What is the terms of the appointment? What is the appraisal commission? Everything will be clearly mentioned in that register. That is called as appraisal register. And jewel scale records. That is whether the scale is being renewed or whether the last date of renewal, everything you can find from the scale register. And now securities. What are the securities? Unissued DD, fixed deposit receipt, then pay order, traveler's check, gift checks are all called as security. For that, you have to ask for the security stock register. And these are the securities that is there. Fixed deposit receipt, DD, traveler's check, duplicate keys of the other branches and banks. Even other branches would have come and deposited keys with you. So that has to be recorded in the security stock register. Balance confirmation from banks. So it's a record. You have to get a letter issued by the other banks. This you can find from the balance sheet on the debit item. You can see this is a debit. So from the debit, you can get what is the balance at State Bank of India, what is the balance at IOB, what is the balance at the Reserve Bank of India. Everything you have to get a letter from the other bank and you have to compare it. And if there is any difference, then that reconciliation work has to be done by the bank and not by you. That's an immediate. I mean, out of curiosity, don't go and do the reconciliation. It will definitely you will waste a lot of time. And list of outstanding unresponded entries for more than 6 months. That suppose if the outstanding is for the more than 6 months, that you have to prepare it. From that point, you have to report. And now investment record. Whether you made the investment within India and what is the deposit receipt and where is the deposit? The register is for the investment and receipt is a record. If you made the deposit outside India, for that has to be clearly mentioned in the record. The receipt you have to see. The advances, records and register. What are the types of records and registers available for the purpose of advances? Proposal received register. So whenever anyone submits the application, that has to be recorded in the proposed received register. And the manager, he has to enter everything in the process note register. Next one is now he has sanctioned the loan. For that, he has to record the same thing in the loan sanction register. But normally in one register, everything is being ledgerized. So 1 to 10 proposal, 11 to 20 process, 21 to 30 loan sanction register. But we can say that for each and everything, there's a register must be there. MODT, What is the MODT register for this date of sanction of loan? Whether MODT is created or not, for that you have to ask for the MODT register. Then EM register, equitable mortgage register. Ask them to update all loan documents. It's a record because they have to update all the loan documents. Loan files should be produced as and asked. Here, I want to say one thing. And you ask any files, and if the manager has not produced, kindly take note of it in your record. Then, if it before the audit also, you have to ask once again if they have not produced any of those files, then the same has to be recorded in your report. And advances register. What are the other things? Stock register, stock forms file, and inspection register because they have to go for the inspection, and delegation power circular. It's a record. It's a record that you, for the purpose of audit, you have to ask for the delegation power circular and charge creation register. Next one is legal notice issued to them. Suppose if the party has failed in making the payment, the advocate, they will issue the notice. For that, there is one register called legal notice sent register, suit filed register, NPA register. Suppose if any account you are transferred, there is another separate register called as NPA register, and AOD and oral register. It is acknowledgement of due or revival letter. For that also the branch, they should have separate ledger, and DPN register. Because everything, even you can, by having a common column for X party, everything you can fill in. But for each and everything, there should be a register. But if they combined everything in one ledger, it is fine. Because you have to verify all this. Insurance register, whether the insurance is done on time or not. See, what are the things that you have to see from the insurance? So insurance should have got the banker's class, and it should have got the, even other day, yesterday, so we discussed about the insurance, that is, there should not be any under insurance, and the life, there should be a life to the insurance, life to the policy, everything that you have to see from the insurance register. And last year MOC register, please ask for the last year MOC register. Normally, they will produce a last year MOC form, and this year MOC form. Year MOC register. What the MOC that you have to give, that also you have to, they have to record in the MOC. DACGC, Credit Guarantee Corporation register. ECGC, Export Credit Guarantee Corporation register. Claim register. Suppose you can make a claim before the income tax or before the insurance authority, before the ECGC claim, on date on which you made the claim, whether it has been paid or not, that has to be recorded in that register. And if it is not paid, then you have to write the reasons for that claim. And subsidy register. We discussed about the subsidy register. Deposit lien register, guarantee register, loan return off register. Normally, you will not find the register. Here, you have to verify the loan return off register. If any loan is written off during your audit period, that has to be recorded in the loan return off register. SARFAESI issue notice, SARFAESI notice issue register, and letter of credit register, then bank guarantee register, packing credit loan register, bill discounted register, fraud register, CESI form register, and system maintenance register, disastrous plan register at the branch level, and stationary stock register, stamp stock register, petty cash register, suspense account register, sundry assets register, bills payable register, sundry deposit register. All this, now everything is system based. You can take the printout, you can verify, but this register has to be maintained either on manual basis or on the system basis. Then list of overdue deposits. What are the other things? List of overdue deposits you can take from the printout. What are the items that is there in the inoperative? Previously, when they maintain the system and manual, they have to maintain all these ledgers. Dormant account, maybe it is also equivalent to inoperative. that is between 1 to 2 years, they are called as dormant. If it exists 2 years, that is being covered under the inoperative service charges circular. What are the service charges circular? That is that you have to see, and other audit files, it's all record. That is concurrent audit report, stock audit, revenue audit, RBA audit, inspection reports. All audits you have to ask for your verification. And log report. Log report you can take from the branch, and inter-branch reconciliation statement. Now it has been done on system basis, and foreign exchange details register. This also you can get it. So all these registers you can get it from the system. But as an auditor, you have to verify all these things. Clearing house. So whether any fund has been transferred against the shadow balance or not. So you have to verify the clearing house and check return register. This register you have to verify must, because this check return register is being, even now it has been maintained manually. Because if any check is returned for want of funds or insufficient funds, then section 138 of NI Act, Negotiable Instrument Act, has to be implemented. So you have to see the check return register. Sorry, self-help group register. These are the registers that you have to verify. You have to call and you have to verify these registers, because this will be helpful to come out a conclusion during your audit. And even I might have omitted some registers, some columns. If you want, you can put it in the chat box. I think to the maximum extent I have covered, and because sometimes due to my non-concentration or some oversight, I would have omitted some ledger. If you want, you can give the suggestion. Now I am going for the next area called bank frauds. We will take bank frauds now, because this is a very important thing that you have to verify and you have to do it. What is a bank fraud? Yeah, I want to tell with a caution. I want to stop the presentation. I think can we break for 5 minutes? I think how many members are here? We'll break for 5 minutes now. The time is 5:55. We will come back in 6 o'clock. Can we break?
Sir, couldn't hear you, sir.
sorry. Now I'm going to start with the bank frauds. Now I'm going to start with the bank frauds. I want to start the presentation with a caution saying that if any fraud is undetected during the course of audit, then the auditor is held personally responsible for the loss to the bank, apart from losing our certificate, apart from facing our institute action, apart from facing the court action and everyone. Am I audible, sir, now? I think Subbarao, sir. Am I audible? Yeah, thank you. And now this caution is very, very important because everyone has to be very, very careful. And in LFAR, this fraud is being given importance. Even they divided the fraud into 4 parts in 4 manner. 3 and 4, you have to give the list. You have to give the list. And 1 and 2 say that the branch has found the fraud and they have reported to the RBI, and the RBI still they have to confirm the fraud. And second one is their branch itself, they have found some fraud, they have reported to the controlling authorities, and the controlling authorities, they have to take the decision. That means all the fraud register, fraud details that you have to get from the bank. Next one is red flag account. Because in the LFAR, they say that the probable fraud or chance of fraud, everything you can get it from the category called red flag account. That is, if any raid is being conducted by the tax authorities, then that account you can classify as red flag account. And if there is any fund diversion or if there is any suspicious transaction in the account, that also you can record in the red flag account. So this is a general thing, but the LFAR, they want a specific report, and once again I say that you have to detect the fraud, otherwise you will be in danger. And, what is this? The fraud, if you fail to find fraud, for all this you are responsible. You are responsible to ICA, you are responsible to RBI, you are responsible to even to the fellow chartered also, you are responsible. Suppose if because of your negligence, if some auditor has been affected, or because of your wrong report, some auditor has relied on it, then you are also responsible, and you are also responsible to all the banks. Also, you are responsible to the court. And in LFAR 2022 fraud, they say that fraud detected as well, but confirmation of reporting to RBI is not available at the branch department. So this point you have to ask from the branch. Next thing is whether any suspected or likely fraud are reported by branch to higher authorities during the year, and if so, what are the details? So that means you have to ask these details from the branch. Have you reported this? And if the manager say no, you have to get a letter. Third one is, it's a very big list. In respect of fraud, based on your overall observation, please provide your comments. So that means they are pulling you to give the potential risk areas which may lead to the perpetration of fraud, or what? Falsification of accounts and false representation by the borrower, misappropriation of funds, especially through the related party or shell company transactions, and forgery and fabrication of financial statements like invoices, debtor list, stock statements, trade credit statements, shipping bills, work orders. So that means you are supposed to verify all this while you verify the loan. They say that fabricated invoices. So you are saying that invoice is available. You have to see whether that invoice is a genuine or not. You have verified the data list, and you have to see whether all those data are fabricated or forgery one. So you have to, they are pulling it. They are pulling you to comment on this. So you have to be very, very careful. So current account outside the consortium. List of debtors and creditors were being fabricated and receivables were not followed up, and the return of update of the related parties. Fake export and shipping invoice, that is the overstatement of invoices, all hawala transactions, stock statement, overstating of invoice amounts, because in the export, to get more duty drawback, what they will do, they are sending goods worth of 10 lakhs, but they can record the invoice, say that we have sent 30 lakhs worth of goods. But based on 30 lakhs, the government will pay you duty drawback. But that 30 lakhs have to be recovered from the party. Normally, when you see the huge export bill outstanding, so you have to go depth into the transaction because there will be something wrong. Because you are sent only for 10 lakhs, the payment will come only for 10 lakhs. And the remaining 20 lakhs is a fabricated amount or fake one. For that 20 lakhs, no fund will come to you. So RBI will definitely question you. So you have to be very, very careful for that. And fourth one, RFA, red flag account. Whether the system of early warning framework is working effectively and required the early warning form the basis of classifying an account as RFA. So this is the fourth thing that you have to do as per the LFAR. This is the new LFAR. Now, what is the RBI instruction? This I already said. Any fraud is undetected course of audit, then you are responsible. Who commits a fraud? Staff, internal, they do the fraud. External, even the depositor, borrower, outsider also, they can do the fraud. And both internal and external, they mix together and they can do the fraud. And why they commit the fraud? Improper recruitment, because if the employees are not qualified and they are improperly recruited, and lack of training and job rotation discipline, there is no discipline, you will do the fraud. So for this, these are the reason to commit the fraud. And indebtedness of the employee. Suppose an employee is a debt person, I mean, he has got huge debt from outside, then he will definitely tend to do the fraud. And if he is doing side business, or he might have given the interest lending, that is money lending, the employment activities, it is there. And but this is possible only when you are a content auditor, you can find this. But as a statutory auditor, it is not possible. But anyhow, you should know this. And the living standards of the employees. The manager, he might have come in scooter or even scooty pep. But this clerk would have come in car. So the living standards of employees you have to observe. Carelessness and casual attitude towards operation. We never, whatever we think, we will say. So these are the reasons to commit the fraud. And lack of blanking, sincerity, enthusiastic approach. What are the psychological factors? Lack of identification of work, lack of proper recognition of work and achievements, lack of reward. And I've done everything, but no one has recognized me. So he will definitely do the fraud. And if he do the fraud, he believes that no one is able to find the fraud. In banking sector, I will say today you may escape, but tomorrow you will be caught. You will definitely caught. So no one escaped with the fraud. Even you can find the fraud after 10 years also. Where we can find. So when you scrutinize the sundry assets, sundry liabilities ledger, you can easily find why these entries are outstanding so much. So lack of motivation, moral building, change in moral values, that is also the psychological factor which lead to the fraud. The dominance of I can do anything. It is me. So this is also make the person to commit the fraud and not adherence to the stability of the policy. I will never follow the bank rules and regulation. Who is he to say? Manager is a manager. I am not responsible. I can do it myself. So this is a psychological factor which may lead to the fraud. Inconsistency in decision making. That is also another reason to commit the fraud. And this one was it. Proper two-way communication in the organization. There is no proper communication between the manager or between the staff. That also may lead to the fraud. What's the general behavior? Tries to oblige the employees and is generally highly cooperative. Whenever you call him, he said, yes, I'll come. And sir, I'm ready to cooperate with you, sir, no problem. So he said, okay, no problem, everything is solved. It's a general behavior of a fraudulent person. And ex-employees are now allowed to do the banking transactions. And they want to dominate the present employees. And because when the ex-employees are allowed to do the transaction and if they commit fraud, there is no binding for them. So This is another important area. This is a behavior of the ex-bankers are very much important. And it is quite popular among staff members. So anyone, if you go and ask him, no, that is not taking, please don't ask. So in almost in all branches, this character is quite popular among the staff member. Always tries to perform the job without others knowing. Don't involve in my job, I'll do on my own. And he always tries to win the trust from the other person. Means whatever I suppose, if I want whatever I did, it has to be endorsed by you. So I always try to get the trust from the others. Yeah, he tries to get the information because he said, sir, any circular has come for this because he wanted to do some mistake. He tries to get all the information because the information has to go to the manager, but he's only a clerk, but he tries to get the information. It's a general behavior of the fraudulent person, and generally not interested in change and rotation of job asset. This is an important thing that you have to see. So you have to ask for the staff movement register that a clerk or cashier will be allowed to sit in that seat at least a period of minimum, at least the maximum period of 6 months. So once in 6 months, they have that job has to be rotated. That is why even they are transferring the staff from one area to other. After 3 years, they transfer into other branches or other places. Next one is he comes early and sits late in the office. Before opening the branch, he'll be there at the branch, and he leaves the branch after everyone has left. So this is a general behavior because he wanted to save himself. Because has anyone found anything about my behavior, about my fraudulent behavior? Next one is unreasonable postponement of activities. That is, whenever you ask him to do anything, he postpones that, sir, we will do it later, because he has committed some mistake. So these are the general behavior that a fraudulent person is doing. And from where we can find the fraud? By way of compliance, by way of change in job rotation, updating of housekeeping, balancing of the books, audit and the inspection department, visits by regional office or zonal office, scrutiny of the control returns, and presence mind of the alert and efficient staff. They can find the fraud. From that, you can find the fraud. And what is the auditor's duty? Don't take the things and facts at face value. Now the role is different. I am going to present the session in a different manner. Don't take things and facts at the face value. Don't believe anything. The basic concept. Don't believe anything, because you are going there because you are taking the risk of your certificate. You are taking the risk of your life. So don't take the things and facts at the face value, and don't trust others all the time, and don't believe your eyes. So they produce the records. Suppose in one of the cases they produce a fax message and say that it has been duly signed by the regional office. And when I saw the fax message has come from the browsing center. So they, if you see the fax message, you can come to the conclusion that yes, bankers are correct. But don't believe your eyes. You have to go through the records and you have to verify it. And be very analytical and investigative. And don't consider the person guilty unless it is proved beyond doubt. So don't say that he has committed the fraud. You have to prove everything. Then only you have to say him that yes, they have committed some fraud. Do all the acts with due authority, with due diligence, bona fide, and without bias. So without bias, you have to do all the acts. Do such acts which further distinction between bona fide and mala fide intention. Suppose if it's a bona fide, okay. And if it's a mala fide intention to do the fraud, you have to verify. Analyze, always come to the final conclusion after taking into cognizance of the total facts and circumstances. So if based on only one situation, you are not supposed to take any decision. You have to consider all the things and you have to come to a conclusion. Next one is avoid piecemeal approach. So today I want to see some 7 pages. Tomorrow I want to see 8 pages. No. When you want to verify and when you find that there is a fraudulent transaction, you have to do at a stretch and don't do in a piecemeal manner. The major frauds prone area in a bank. Deposit, advances, remittances, bills, LG, letter of credit, cash, clearing, foreign exchange transactions, computers operation, security items, miscellaneous items. This is nothing but bank balance sheet. All bank balance sheet are fraud prone area. This I'll skip. So fraud status. Here the first thing, that is the last thing that you have to take. That is fraud is ocean, you can't get that depth. This is a slogan that you can see. Even in my presentation also I used to say bank audit is ocean, you can't get that depth. So here fraud is open, you can't, it's an ocean, you can't get that depth. So the RBI definition, what is a fraud? It's a deliberate act of omission or commission by any person and carried out in the course of banking transactions and in the books of accounts maintained manually or under computerized system, resulting in wrongful gain or any person for a temporary period or otherwise with or without any monetary loss to the bank. This is the definition given by the with or without any monetary loss to the bank. What is the RBI classification with a reference to fraud? They define, they classified fraud into 2 categories. One is advance related fraud, deposit related fraud, service related fraud. And what are the types of fraud? Fraud in banks and fraud on banks. And what are the fraud in banks? Cash lending during office hours. That is from the it's all practical case that we have to see cash lending during the office hours. The cashier, sometimes they give the cash from the counter, and before 2 o'clock, the other person who has got the cash, he will come and remit the cash to the cashier. The cashier, he will take 1 day interest. This is without authorization. See, this I will tell with a practical case. This has happened in my content audit. This is against the shadow balance. See, normally, one customer, he used to deposit some daily, he used to deposit 50 lakhs to 60 lakhs worth of DD and check for collection. So the bankers, what they do and the party, he will come and he give you a check or say, I want 40 lakhs against the shadow balance. If you pass the entry in shadow balance, then the system will charge 1 day interest. But the bankers, they don't want to charge the interest. This is because their party is maintaining very good Friday balance. That is, on Friday, if you got very good balance, then it is okay. And here the party has given the check for 40 lakhs. The officer, what he did based on the shadow balance, and after seeing the transaction shadow balance, without making a debit, he passes the check to and saying that pay cash, and he hands over the check to the cashier. And the cashier, he will give the check, give the cash amount of 40 lakhs, and he will pass the entry only after the shadow balance is lifted. That is only after the feds of the check is known. He will pass the entry only after the shadow balance. So the computer system, it will not charge day interest. Thereby, the branch, they help the customers to gain in the form of interest payment. And I observed this and I asked the manager, sir, it's a concurrent audit, around 12:30, I went to the manager cabinet, sir, I want to verify the counter cash. And the manager has immediately objected that he knew that he has paid this, he has adopted this technique, and he immediately said that, no, sir, it will affect our business. Please, we will do it in the evening. I said, no, right now I want to verify the cash. Before going to that, what I did, I went to the cashier cabin and I asked the cashier scroll and put a red line in a particular place. Sir, don't write anything below than that. please stop the operation because I have to go to the manager and I have to get the confirmation from him and I want to check the cash balance. Don't pass any entries after this line. If you pass, then you will be in trouble. Then the cashier got annoyed because he has given the cash without making any entry in the cash book. But he has got the check. The officer has passed the check, but without making any entry in the cash register, he has passed the check. He has made the payment. Then cashier, that is manager has objected, no, I won't allow you to verify. Then I said, sorry sir, if you are not allowing it, then you will also be in trouble. Then he called the head office. Instruction, it's a head office. Chandru Nakupara. He called the head office and he called the general manager inspection, say that, sir, this auditor, concurrent auditor, he wanted to verify the cash now. He wants to verify the cash now. And it will spoil our business. And he is very adamant now. He wants to verify the cash right now. And he said, then he asked, GM called me and said, no, you verify the cash, you can verify at the day. I said, sir, don't give instruction to me because in the appointment letter, you have clearly mentioned that if the concurrent auditor wishes, you can count the cash at any time. You have given the term in the appointment letter. And I found something is fishy. If I proved it, then if you stop me from the presentation, from the verification, then I will also include your name in my report. Then GM of that bank, it's a private sector bank, GM of, they say that, okay, Ravindran, you go ahead. Then when we opened and when we verified, that is bank manager has verified the cash and they found that the checks are worth of 40 lakhs this year, but the deficit cash is 45 lakhs. 40 lakhs worth of check is there. That means only 40 lakhs the cashier he has to give, but the deficit is 45 lakhs. Then the manager, he got shocked. Then he asked the cashier, what happened to that 5 lakhs? He said, sir, my friend came, I gave him 5 lakhs. He said he will return around to 1 o'clock. Then the manager said, yeah, it is against the norms. See, convention is 40 lakhs. If it is 40 lakhs deficit, okay. But if it is 45 lakhs, then that means the cashier has lent the 5 lakhs to the customer for the one-day interest. So this is called as cash lending during the offers. The result is the cashier was dismissed from service, officer was suspended, manager was transferred. So this is the thing. This is called as cash lending during office hours. You can find in most of the branches. And missing notes in bundles. What is a missing note in bundles? See, who is remitting the cash? It is being remitted by the bank customer, customer's staff. He pretty well know that the cashier, he will never count the cash. What the cashier used to say, sir, you put the cash slip on the bundle, you write your telephone number, and we will hand over the bundles to others. And if there is any deficit, we'll call that number and you have to come and repay it. See, the staff, what he did purposely, he removed some 2 notes or 3 notes and he remits the cash to the cashier. But normally, even they have not checked the cash machines also, they have not checked. So if any 3 notes are missing, then if anyone comes and complains, then he called the telephone number on this slip. Then the staff, he will come and give you the 3 notes. So this is another type of fraud that the staff are doing because of the negligence of the cashier. Posting in wrong account. Suppose this you can find from the NPA, posting in wrong account. Instead of your account, the money is posted to some other account. Thereby, they are utilizing the fund 2 days, 2 to 3 days. After that, they give the cash and it is transferred. So that is also another type of fraud. And misuse of sensitive stationeries. What is stationery? Unissued stationeries are there. Sometimes in one of the banks, they removed the DD. They removed the DD in the middle of the DD book and they've encashed it. I found out that in my audit, because when you see the notes, when you see the book, it should be intact. Suppose if you remove one note, one paper from the middle, then there will be some folding you can find. So when I opened the DD book and I found that one DD was missing, DD number was missing. When we scrutinized further, I noticed that the officer has encashed the DD by because the same is being paid at the Bangalore from Salem, because DD is issued from Bangalore and the payment is being done at the Bangalore. So this I have found out during this staff audit. So misuse of sensitive stationery is a fraud done by the staff. Now fraud at banks is a technology related fraud, deposit related fraud, or advance related fraud. Now I'm going with deposit frauds because we have got some 80 case studies on this fraud. I just touched one or two frauds because one or two case studies, so that we can complete the session. And matching deposit, morning itself I said the bankers, they ask the customer to make the payment in the SB account. The subsidy, front-end subsidy is being adjusted and they adjusted towards the loan. So this is a kind of fraud because the manager is a party to spare the government funds. So matching deposit, that is a one type of fraud. And change of photos. See, this is also you have to observe because you are going to the audit. If you are a statutory auditor, it is okay. If you are a concurrent auditor, you have to see the deposit opening page, opening sheet. In that deposit opening page, a lady person photo is there, but instead of affixing, they stapled the photo. A lady, LTA, and that is she has just the LTA, left thumb impression. And they said that one lady came to the branch and she said, "Sir, I have misplaced the deposit receipt. I want a new deposit receipt, duplicate deposit receipt." So the request, the new manager, what he did, previous manager, he knew that lady, but a new manager is there and he didn't know the lady. So what they rely on the photo that has been put in the application. So in the application, what the plum he did, he has replaced the original depositor photo with the current lady's photo. That means he has removed the staple and he has put the photo and once again stapled it. And manager, on seeing the photo, he released the fund, he released the deposit. He issued a duplicate deposit receipt, and the deposit amount is only 15,000 rupees. Anything less than 15,000, less than 20,000, the manager, they can make the payment in cash. It is only 15,000. But here, the duplicate receipt, now the lady said, "Sir, I want my money back." So since the manager has issued duplicate receipt and he said that, okay, pay the money. And the closed deposit receipt, where he has to go, where it has to go to the original thing through the substaff. Again, when the substaff, he carries the voucher, he removed this lady's photo and again, once again, he stapled the old lady's photo. That is its original photo. After 6 months, the original lady came, and when she submitted the deposit receipt, then only the fraud came into the picture. The idea here is the photo should not be stapled, it should be affixed. It's a left thumb impression should be there. Left thumb impression has been made, and the photo should not be stapled, it should be affixed. This is the rule. So this is the idea you can derive from this fraud. Next one is transaction in dormant accounts. Everyone is doing because unnecessarily money has been transferred, money has been withdrawn from the dormant account. Now it is not possible. It's a system managed dormant account. So when you pass any entries in the dormant account, then that has to be approved by the branch manager. So without the knowledge of the branch manager, no transaction is allowed in the dormant account. Now, going for the advanced fraud, and here I want to, in advances, I want to tell three of my experiences. One is I'll teach you how to get a loan from 5 banks based on only one document. I think few members they knew it because I'll teach you because because all auditors should know all types of frauds. They should be a master of fraud, but they are not supposed to do the fraud. They should be a master of fraud and they are not supposed to do the fraud. The first thing is initially a loan is being received by a partner. Say by mortgaging survey number 57, by mortgaging survey number 57. Then after some time, what this party did, he has divided that land into 4 parts. 57/1, 57/2, 57/3, 57/4. He has got 4 sons. All these 4 parts have been given gift to his sons. In that gift settlement deed, there is one column he has written that since I am having some other property, I have not handed over the original document to you. I have handed over only the Xerox copy of the original document. This is clearly stated in the document, which the party has given gift to his son. But the advocate also say that you have to go and apply for the survey number 57/1. When you apply for the encumbrance for survey number 57, you will get the encumbrance entry. And if you apply for survey number 57/1, you will get only the nil encumbrance. You will get only the nil encumbrance. So all the 4 sons, they got loan from 4 different banks. And I went to the audit and I found that that is for survey number 57/3, I have gone for the audit. When I noticed that something is fishy, so when I asked for the survey number 57, so what happened to survey number 57? Where is the original document? And that son has said, without knowing the seriousness, he said, sir, my father has got the loan from the X-Bank, and after that, he has gifted the property to me. We have got the loan from the other banks. So that means it's a duplicate payment. That is a double payment they have received. That is based on one document. In 5 banks, they got the. So this is one method of fraud. Getting loan based on the. This is also another type of fraud, and what I discuss is getting loan based on creating the settlement deed. You can do the fraud because you are not a master in reading the document. But I advise that you should be getting the experience of reading the document. And the first type of fraud is getting loan on the duplicate copy of the partition, because a partition deed has been written among the brothers. You will be getting to say, let us take three persons. And original deed is with the elder brother, and remaining 2 brothers, they will get the copies. First copy with the first brother, and another with the another brother. So elder brother, middle brother, and younger brother. There are 3 copies, and all these 3 copies have been under the control of the elder brother. The elder brother has availed a loan from a bank. For that bank, I went for the inspection audit. Previously, the inspection work has been given by the banks. I went to the inspection audit, and I accompanied my manager took me to the unit, and I am very much satisfied. I was very much satisfied with the performance of the unit. Electricity bill is in full swing. So any unit, if you go for inspection, you have to see the electricity bill verification. Electricity bill is there, sufficient stock is there, client is there, transactions are satisfactory. Then I said, okay, everything is okay. Correct. Then his name is Bhuva Ragasam. Then after 2 months, I have got a revenue audit from other bank. There when I go through the document, I noticed that their loan is given to the same Bhuva Ragasami of Yatapu. Yatapu is something around some 35 kilometers away from Salem. It's a village. So same person, this bank also they have given the loan. I asked the title deed, the manager produced the title deed. Then I go through the title deed, I notice that his brother's document is given as collateral security, but the charge is made only in the elder brother's schedule, because that elder brother is holding the document. Okay, now when I narrated this case and when I explained this, then myself and the manager, we went to the unit because the revenue audit, for revenue audit, we need not go for the inspection, but I invited the manager, sir, please come, we have to see what is really going on. Then they, on seeing me, that poor Asami, he ran away. He thought, because I went with this manager. On seeing me, he ran away. So it is clearly confirmed that this party has got loan from 2 banks for a particular schedule. Then this manager and the other manager, they sat together and they recalled the loan. After some time, I went for the stock audit of other bank. There also I found the name of Borasan. But the same, with the another brother's document, based on the other brother's document, he has given the loan. So a customer, based on the partition deed, he has got the loan from 3 banks. So my suggestion is, if any loan is being given based on the copy of the partition deed, you have to be careful. So this is an experience I want to tell about this fraud. And the fraud is, say it was around 10 lakhs into 3 banks, 30 lakhs, because for based on one document, he has got loan from 3 banks, but that was totally wrong. And next item is loan against dead stock. This you can find from the warehouse. So this I have found from the warehouse. It's a warehouse loan. That means key loan. You can say that this is a key loan. The branch manager has sanctioned the key loan for a particular party. The unit is, it was situated something around 50 kilometers away from Salem. That is it was situated near Authur. Authur is something around 50 kilometers away from Salem. And I went to the inspection. Before going to the inspection, what the manager did, he called the party, sir, please come to the godown. We are coming. We are coming for the inspection. My content auditor is coming. You please come. Then the party has come to the unit. And this manager has got the key because stocks are inside. So the manager has got the key. He opened the godown in front of the customer and we entered the godown. And I noticed that some stocks are there. It's a yarn. It's a yarn. Then when I saw the year of manufacturing, for example, if I went for the audit for the year ending, say 2019, and the year of manufacturing of the yarn, because in Central Excel, you have to put the month and year of manufacturing. The year of manufacturing, say it is around 2003, 2004. But you are going for audit for the year ending 31, say for the year 2019. For the 2019, the stocks, what they market, what they hypothecate, what they touch is 2003, 2004, 2005. That means all are dead stock. All are dead stock. And when I saw this, because yarn has got a strength of only 6 months. So it's an advice to you, if you are going for the key loan verification, you have to see the quality of the stock. What is the life of the stock? That also you have to bear in mind. So it is a 2003 stock. He has given as security to the banker to avoid 5 crores. And for that key loan stock, there is no security required. So without security, the branch has sanctioned 5 crores to the customer. And when I see the bundles, then I climbed on the bundle, and after climbing some 3 bundles, that is bundle 1, bundle 2, bundle 3. After climbing 3 bundles, I have fallen down. Even I had some fracture in my hand. I had fracture because of the poor quality of the stock. Everything is not in shape and everything is a dead stock. So I have found a hole and I have fallen down. I have got the fracture. Okay, this is a loan against dead stock. So you have to be very, very careful in key loan audit that what is the life of the stock, what is the quality of the stock. There also you can find the fraud. It's a fraudulent transaction. And next one is you ask for some details, and if the branch manager or officer, if they refuse to give details or they postpone the details, there will be some fraud. So this has happened in one of the nationalized banks. And I asked the field officer, sir, can you review the following documents? The field officer say that, no, sir, all these documents are with the manager. Manager, he was on leave. He will come only after 3 days. So I have taken note of that in my note. What are the details? What are the files I asked? And what is the latest position? After 3 days, manager came. I asked the manager, sir, I asked these details, and your officer said all those details are with you. Can you provide the files? Then the manager said, no. I am not having any file. Every file is only with the manager, the field officer. Then what has happened on the day when the manager came? This field officer has gone on leave. Then the manager has got some suspicion. Then he sent a messenger, a peon, to the officer's house and say that, sir, and he called and told his wife that the officer has got some files inside your house. Kindly hand over those files to the messenger. That lady, she didn't know the seriousness and she has simply handed over all those files. When we scrutinized all those files, myself and manager, we found that the loans have been sanctioned in dummy person's name, that is in Benami person's name. The persons are not the regular borrowers. That is, he has sanctioned the loan in the Benami person or dummy person's name. All the loans have been sanctioned by taken by the field officer. And they made inquiry, and later on that field officer has accepted that yes, all the loans have been sanctioned by him, and he has taken the money. So the advice here is, you ask any details, if the details have not been produced by the manager or officer, you have to cover that point in your report. So this is another type of fraud that I have got from the advances. And this is also another experience that I want to share with you. That is sanction of government loans. Say, previously, I think seniors, they knew it. There is one, now there are a lot of government loans. Previously, small loans have been sanctioned by the bank to help the poor people. So this is called as Integrated Rural Development Program, IRDP. Now that concept of IRDP is not there, but this is my experience I want to share. Because I went to that branch as a statutory auditor, I found that some more than 2,000 accounts have been sanctioned to a more than 2,000, say maybe around 2,200 something. They are sanctioned to a particular village. They are sanctioned to a particular village. Then after, when I scrutinize the account, no amount has come into the account. And they say that it's a standard and it is not a substandard. When no amount has come into the account, even the subsidies have also been adjusted against that loan. That is before lock-in period, they have adjusted the subsidy. Okay, that is a different issue. In this case, I got suspicion. What I did, I went to the Panchayat office and found that what is the population of that village, because the entire 2,200 has been sanctioned to a particular village. So I went to the Panchayat and I found that the population of that Panchayat as per the census is only 1,050. So we can say 1,000, we can say 1,000 for example. It is 1050, we will take it is 1,000 for easy purpose. But the branch has sanctioned to a particular village to the extent of 2,200 loans. But as per the census record, as per the government record, the village has got a population strength of 1,050, which includes children, old age people, ladies, and few gents. So this is the concept. Next one is what I noticed. What is the purpose of the loan? The purpose of the loan is to buy the musical instrument, just like Nadaswara, you know it. I think North India, I don't know the instrument. This is it's a musical instrument, Nadaswaram, and Tabla, that is just like drums. For that, they have sanctioned the loan. Nadaswaram and Tamil, and if you know, thing you can put it. It's all musical instruments they have sanctioned. So, entire 2,200 loans have been sanctioned to buy Nadaswaram and Tamil in the form of musical instruments. The total population of the village is only 1050, and the gents, that is the male population, is only some 150 or 160. And all the 150 and 160 people, they are not doing the Nadaswaram and Tamil. They are going to the job and they are doing some agricultural activities, this and that. Only 4 fellows or 5 fellows, they are performing this musical instrument during the marriage functions. So it pricked my mind, and I converted the entire transaction under the fraud. It is not a probable fraud. I have reported the entire transaction under the fraud based on the records that I have got from the Panchayat. Panchayat say that they have given the breakup 1050, and all loans have been sanctioned in the name of the gents only. So I have eliminated all the ladies, children, and old age people, and I compared the figures. So I proved that this is a confirmed fraud. And as for the terms of appointment, I have to hand over the report to the regional office. After completion, I have handed over the report to the regional office. And in that, they say that when the officer who has received the report, he has gone through the LFA. When he noticed that I have reported this incident in fraud, he started to question me. How dare you put this in the LFA under the column fraud? My experience here is, if anyone has objected to your working, then that means something is fishy. Then he said, sir, I have classified, you need not do it. Then we had some very big quarrel, and even he started to call me in singular language also. We had fight. Then regional manager, on hearing the sound, he came out of his cabin and he asked me, Ravindran, what is going on? I said, sir, this has happened when on submission of the report, then this Mr. Ganapati, his name is Ganapati, he said, sir, he started to argue that why you classify this account as fraud, this and that. He asked, no, that is not his duty. Come on, give me the report. And going through that, he said, yeah, you are correct. Then you come inside my cabin. I went inside the cabin, and the RM, he has immediately asked, who was the manager at the time the loan was sanctioned? It was the Ganapati who was sanctioned the entire loan. So he was immediately suspended, and since he has got very big quarrel with me, as because he has prevented me in giving the report, then he was removed from the service also. He was dismissed because he has committed a fraud. So a fraud can be taken. You can identify the fraud by looking into the account, and you have to go to the genuineness of the transaction. That way you can identify the fraud. With this, there are so many experiences in the advances. There are so many experiences in the frauds, and that is in the deposits and all other areas. So as an auditor, you have to be very, very careful to identify all those frauds. I think with this, I'm stopping my presentation, and this I'm already recorded. I will share this recorded videos to you. And if you got any doubt, you can put it in the chat box. And I'm very, very happy to be with you for the entire 2 days. And definitely, I wish you all the best for your audit career. And you have to be a successful person. And with the caution, 2 cautions I want to say once again. One is non-classification or wrong classification of NPA will also put you into trouble. And non-detection of fraud will also put you into trouble. And others are very, very important. And whatever be the notification that I got, I will something I have shared, and even still I have got some 2 or 3 materials that also I shared to you on mail ID. And if I got any doubt, you can put it in the chat box. Otherwise, we will wind up the session. And thank you very much for the effective participation in the mega training program. And once again, I repeat that the bank audit is an ocean. You can't get the depth. When you can cover, you can tell anything. You can go on, you can tell anything, because time is very short. So I think, I hope to the maximum extent I covered the portion. And any doubt during that, subvention certificate, I will share the evidence to you, because this you have to verify. I've already prepared submission certificate format. I'll share to you. Don't worry. Inter submission and even MOC also. I think Joseph sir asked about MOC. I'll tell the importance of MOC and the parking of MOC. That requires some time for me to prepare. Maybe in a day or two, I'll prepare everything and send to your mail ID. Concession. Subvention is a concession, because if you go to the open market, you have to lend at the rate of say 7%. The government is giving some subsidy towards the interest. That is called as subvention. I'll give the details in. I'll give everything in detail. Don't worry, Subharas. Some interest subvention also. I got the PPT. I'll do it. I'll share. Don't worry at all. Whatever details you want, you can. You have got my mail ID. Say vanakamadit@gmail.com, or even you can raise the same thing in the MTP video. I mean MTP WhatsApp group. If you got anything, your doubt, you can put it in the WhatsApp group. So I will answer. Don't worry. And any doubt, you can ask me. And I hope a few members have already left the thing, because I know that tomorrow is the last day. Even some of my clients, they are waiting outside. Even I have to attend them, no problem, because I have made a commitment to you. I have to complete your work, and I'll see that I'll do it. And it is up to you to say. And what about the presentation? What is your suggestion? Everything you can share now, or if you find no time, you can put it in the WhatsApp group also. Thank you very much for the effective participation. Danny, thank you. Joseph sir, thank you. Prasad sir, Vamsi, thank you everyone. I hope everyone has enjoyed. Aati, thank you for your effective participation. I think you have raised some 3 or 4 questions. And Subbarao sir and Danny, I think, and Sanchana. Everyone has raised a lot of questions, including Joseph sir. Thank you very much. After the presentation, after this, I have almost recorded everything. All the 3 programs I have recorded, and today, after the completion of this session, I'll try record this and share this to you in your WhatsApp. 2 days very useful. Thank you, Bharani Kumar, for your complimentary words. I think I can leave from the session, because members, they started to leave. Please attend your office tomorrow, because tomorrow is going to be the last day for the assessment year 21-22. We have to file the returns if anything is left, and we'll see during April we'll meet once again. And if anything is needed, we will convey a short meeting, and because I have got a Zoom facility, and even one-to-one also we can have. Suppose we have got any doubt, you ask me to come in Zoom. We will meet in one-to-one also. We can have the discussion. Thank you very much. I'm just ending the session, and I wish you all the best for your audit.